Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, on to the show.
All right, everybody. Welcome back to another live stream. Today, we changed themes. If you didn't notice, we're pirates for the month of May. Why not? We decided, well, we do this every month. We change up the theme of the live streams of the A1 Trading Show because it's fun and, it keeps it fresh, keeps it exciting. So this month we are pirates. This month, the question is, are we going to be able to steal away a bigger drop in the S&P 500, or is this, is this going to bottom out and start ripping today? Today is a huge, huge day because the biggest pirate of them all, Jerome Powell, I'm just kidding. He's not a pirate. He's coming on and speaking a little bit about the Fed's next big move. We get that press conference in just a few hours. We're starting early. Yep. We're starting early. We got Jerome Powell on the mic. If you hear him sneaking around the back of the stream on the soundboard, it's because he's really just here. He's secretly behind the scenes. Yep, exactly. So we're going to be covering all the way from now until then. We're going to be running into the event. It's going to be a lot of fun. We'll be having James come on for a little bit, and then we're going to be doing a trading battle. It's going to be a lot of fun. Love the pirate vibes. Yep. Going to be fun. Pirate theme for the month. All right. So let's talk first a little bit about some of these charts. First thing that we need to know is that today, market seems a little wobbly going into this event. You got the NASDAQ down, and this is down after being down. So, that's good old-fashioned down bad, because what we can see here is that, again, stock market's been struggling the last month or so. In fact, we had our first red month. I'll show you this. First red month after a 5-month winning streak on the NASDAQ and the S&P 500. And to be honest, a lot of people are freaking out like the world is ending, but to be honest, it was very much needed. In fact, I started thinking we'd see a pullback all the way over here. So I was early to thinking that we'd get a pullback. One has started to form now. And now the bigger question, as it always becomes the bigger question, is, are we going to see this pullback become a correction or even a reversal? Or is this simply a pullback that you buy and it rips higher? So I'll give you all my thoughts on this. Today is arguably one of the more important days of the entire month of May, because today we get word from Jerome Powell and his entourage about whether or not the recent economic data is concerning them in terms of the inflation fight that they have been. The inflation fight, yes, Jerome Powell, the inflation fight that we've been fighting for a few months now, or not for a few months, for a few years, right? Ever since we saw the breakout of COVID-19, just so you guys know, pre-2020, pre-COVID-19, inflation was actually low. Inflation back in this time, some of you may not have been trading at this time. CPI during pre-COVID period was actually very, very low. In fact, CPI events were like not even very exciting. For a long time, you would go to the Forex Factory or MyFXbook, wherever you're looking for your economic data, and what you'd see is CPI on the horizon. Everybody would say, that's not a big deal, because back then inflation was not that pressing. Nowadays, CPI is like the biggest event of the entire month. And so we have to be aware that, we're living in a time where inflation is the focus of the Fed, and that is what they're going to be discussing today. Question is going to be whether or not the post pandemic period here, are we winning the war on inflation, or are we going to enter into another wave? It's kind of like, we don't have we're all very fortunate not to be, have ever experienced like a world war. But during the world war, they constantly were watching, listening to the radio. I guess they didn't watch TV or watch news, but they listened to the radio, they listened to the newspaper, to see how is the war effort going. Are they winning that war? Well, right now, although way better to be fighting inflation than fighting, a world war. This is kind of the war that we're fighting in the monetary policy world. Is this inflation thing done, or is it just getting started? And that's the question. I'm going to take this off because as much as I like the pirate hat, we're going to give it a break. But I do have one other thing to show you guys. You ready? We don't talk about it, okay? We don't talk about it. So, exactly. Smash the thumbs up button. I'm telling you, smash it. Smash it or you're walking the plank. Pirate theme's going to be fun this month, guys. Okay, so the question is now, we've had more strong economic data out of the U.S. This has been a theme. This has been a frustrating, fight for the Fed, because here's the thing. We had more stuff that came out this week. I'm talking about specifically the employment cost index, which basically showed that the costs for hiring and payroll and, employment is going up. Which, of course, if people are getting raises, that's great for those individuals, and that's awesome. But in terms of a macro effect that it has on the story, is that's inflationary, right? Again, that's the issue, is that we're running into this perpetual cycle where the consumer hangs in there, and then people are getting raises and they're spending money, and then the consumer and the economy has been much harder to crack than the Fed probably thought. In fact, most people thought. That being said, with today's Fed meeting, we're going to get kind of the latest synopsis, the latest thought process in terms of reaction to all of this data. We have a couple things that are a given. And my opinion as we go into this is I think that Jerome Powell is going to come out more hawkish than people are thinking. And I guess consensus has shifted a little bit in recent times. That's why we've seen the market drop. People are increasingly thinking this as well. But the problem is inflation is still high. So you have CPI still printing hot reads. By the way, also PCE. So you have inflation reads that are hot. You have jobs that are hot. Okay, I'm going to draw little flames here. Okay, so flame. Okay, jobs are hot. Inflation is hot. What can the Fed do with that data? They can't. Most likely, the reason I think that they probably come out, Jerome Powell specifically, is hawkish today, is because he's looking at the same data as we are. And he's seeing that, again, those metrics, the key metrics that they are focused on, are working against their mandate of trying to get inflation down. Inflation, let's face it, has not been moving in the right direction for some time. Let me show you on the Edge Finder. We're going to show the year over year inflation data. And I'm going to focus for a moment on the US relative to its European peers. I've pulled up this chart many times, but it's really important stuff. What I want you guys listening to listen for is, or to focus on here, is look at the blue bar. The blue bar is the United States CPI reading year over year that's been produced each month. So what we've seen here is that inflation does not look like it's getting closer to that 2% target. In fact, what we've seen in the most recent couple reportings is actually inflation is trending higher. So this is why this right here is the basis for why I think that Jerome Powell today could be a little bit more hawkish. Now, the market already is kind of thinking this too. The market's now expecting Jerome Powell to come out hawkish because, again, all of the indicators here are strong. Let me show you the other big one. If we take a look at jobs, okay? Look at jobs. Remember, strong jobs market usually means inflation created because it's pretty intuitive. If lots of people are getting hired, lots of people are getting wage increases, lots of people, very few people, relatively speaking to historical averages, are unemployed. What you have is you have a economy in which the consumer can still pay their bills. They can still go purchase things. They can travel. Now, is that showing some signs of cracking? Sure. Take a look at some earnings that have come out from some key players. You saw UPS had poor earnings. That's the shipping company, right? Or the cargo and mail company. That slowing is a sign of potentially a slowdown in the economy. You also had Starbucks, which is an interesting one to talk about. Starbucks, which is kind of discretionary spending, came out a little bit light yesterday. In fact, the stock's getting killed today. The point is you're seeing some signs of cracking, but still at the same time, people are still getting jobs. And so what the Fed probably needs, and this is probably becoming the reality, you need jobs to chill out and you need the consumer to pull back on their spending in order for inflation to really chillax, right? For lack of a better word. In order to get inflation to get chopped, right? If we want to chop inflation, unfortunately, you're going to have to chop off the jobs market and the economy, right? There you go. Not ideal, right? Nobody likes that concept. Nobody wants people to go unemployed. Nobody wants the, people to hurt in the consumption world, but nobody wants inflation either. And this is the tricky rock and the hard place that the Fed find themselves between. They have to get inflation down, but they don't want to crash the economy. But it seems like they're going to have a real hard time not doing one of those things, right? You either lose the fight to inflation and you just say, we're cutting rates because there's an election. I don't know, right? You either say that and then you lose the fight to inflation and the economy does okay, but then suddenly inflation kills the consumer and then you have a bigger recession. Or you say, look, we have to keep rates higher for longer. And I mentioned this in my tweet yesterday. It's still Twitter. We don't call it X here. So I mentioned this in my tweet yesterday. I would not even be shocked today if we heard from Jerome Powell that they still have the potential tools at their disposal to interest rate hike. Nobody wants to hear that because it's not fun, and it would probably mean a large correction in the stock market, and it would probably cause recession fears to drastically increase. And that's not what I think he's going to say today, but I would not be totally shocked if he did. Okay, you have a strong labor market. You have inflation persistent and stubborn and strong. What does the Fed need to do? Well, the base case is they need to hold rates at where they're at. They can't drop rates because if you drop rates, inflation's going to go crazy because everybody's going to go buy a house, right? Everybody knows this. Trust me, I'm one of those people. I'd love to go buy a house, but mortgage rates are pretty terrible, right? So if you cut rates, what happens is a flood of stimulus goes into the economy and a ton of spending goes on. So I don't know, right? That's the thing. What's your Twitter handle, Nick? At TraderNickFX. Thank you to the producers for dropping that for me. Appreciate you. Thank you very much. Appreciate that one. Yep. See, what if Trump was president? I don't know, man. I don't know. I mean, at the end of the day, Trump, Biden, all of them, they just spend like they spend it like it's not their money, which is exactly what Don't get me on that topic because I'm not really a big politics person, but I don't love our system in general because politicians are just incentivized to spend to keep votes coming in, which nobody's going to like the guy who says, "Hey, we're going to cut spending on everything." Right? That's probably what needs to happen, but nobody's going to do that because then you're never going to get voted in. So I really don't have a, in terms of this year, the election will cause volatility. That is a certainty. Whether that be, up or down, that's another discussion. So let's get into some charts here. I want to talk first just briefly about the NASDAQ. This level that we talked about, guys, ended up becoming perfectly the level of resistance that we thought it might be. And you might say, well, Nick, you can say a whole lot of stuff and you can point to when you did stuff, but I did actually place a trade on this. So I put my money where my mouth is. I thought we would see some rejection in that area. So I shorted the Russell. I'm currently in a Russell short. This was a trade shared inside of our Discord yesterday. By the way, join the Discord if you haven't already. We'll drop a link here in the chat for you. If you're not already in the Discord, it's free to join and come join the action there. Okay. So I shorted the Russell yesterday, sent this in Discord, and I'm still in the trade. Stop loss for me right now is just above this little wick high that we formed on the IWM. So when markets popped this morning, when they dropped afterwards, I went ahead and trailed my stop loss and just locked in a winner here. If the market somehow, some way, if Jerome Powell comes out and shocks us all and says something more dovish, I'll just take profits on the trade. That would probably be let's call it $1,000 trade. So I've locked in some profit on this one, and we'll continue to watch it. So yep, exactly. Ring the register for that one. Not bad. So Russell is rolling over. The Dow Jones, the NASDAQ, the S&P also seeing some decline here. And I do also want to add context. Yesterday, I did officially get stopped out of my silver play. So I thought silver would hold this level, and it did for a few days, but we didn't get the follow through. And when it rolled through the lows, I went ahead and stopped out. So I took a loss on that one. So I've got so far this week, one winner, one loser, and continuing to watch that. So here's the thing. Yields are all over the place today, and they probably will be all over the place until we hear from Jerome Powell. If you get a hawkish narrative, yields will jump, and if you get a dovish one, yields will drop. Let's take a quick look at gold, talk a little bit about the metals world for a moment. So from a price action standpoint on the 4-hour chart, you're at a key level of resistance. In fact, this was a key level of support just 24 hours ago. And that level broke. So where we are currently left in terms of the setup on gold is you're now starting to look a little bit weak here. So what we had here, okay, so there's my 4-hour chart levels.
We entered on this H4 candle.
We got the H4 going on. So gold dropped pretty hard yesterday. It is bouncing here today. But the question will be whether or not this level kind of rolls over and continues lower. I'll tell you right now, yesterday, a lot of people asked me, Nick, are you buying the dip on gold? I saw a lot of comments, a lot of questions about gold. And I mentioned that I was not, just because for me, I have to have a reading that comes through on the Edge Finder for me to really take a setup seriously. And so I avoided gold right now. It's still getting a neutral rating. It's going into the minus territory, -2 reading. If it gets over the -5 hurdle, that would give us a bearish reading on gold, but we're not quite there. The trend has I cannot buy that, right? The trend flipped bearish. So we're looking at the trend moving lower. Economic data has been hot in the US. That's pushing gold lower. So for me, if I go in here, let's just select gold for just a moment. So when I look at this sentiment wise, the commitment of traders data shows still solid buying overall on gold. So that's a positive for gold, but most other things, most other things are looking pretty strong against gold, right? Retail sales, employment data, hot labor market. Sticky inflation is not necessarily good or bad for gold. It's more so, how does the other economic data look, right? So with our scoring system, I am kind of just staying neutral on gold. From a technical perspective, though, I'll go back to this chart for a moment. From a technical perspective, this looks pretty rough because you have this, what was an upward trend, pretty clearly an upward trend, right? Higher lows, higher highs. Then you fizzled out here. You saw rejection, rejection, rejection. But then really what proved it was this break here and the break below support. So price action looks like it's flipped, at least for now. And on the 4-hour chart, I would say we probably should treat this area for what it is, which is resistance, right? You got resistance here. Support, 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 retesting that same area. But again, can you say confidently that sellers are going to hold this area? I would say no, because the Fed's right around the corner. If Jerome Powell comes out and says something really hawkish, gold's going to drop, right? And if Jerome Powell says something really dovish, gold might actually just break through all these levels of resistance. This is why when we talk technicals, guys, we always bow down to the true king, which is fundamentals. Fundamentals are what really move the market. Red folders are red for a reason. They move the market. They matter to the market. So we're going to be watching very closely to see what happens in the press conference today. And if you get something that is really hawkish, gold probably looks like it has lower prices to come. Part of the reason, too, you have to remember, look at the big picture, guys. The big picture was, a month ago, everything was just talking about what was happening in the Middle East. That's really calmed down. During that period of time, gold was acting like a bit of a safe haven, right? I mean, it always is a safe haven, but the need for a safe haven was very high when people were really uncertain if World War III was around the corner. Then we started to see some de-escalation to a degree, right? It just didn't seem like there seems to, at least for now, be a pause on, big aggression escalating in the short term. So the market is seeing that. They're saying, okay, move back into other assets, other things, the need for a safe haven may be a little bit deteriorated. So right now the trend is lower. I don't have a bias and I'm not taking any trades because, again, Edgefinder doesn't give me a solid setup to actually place a trade on gold. By the way, guys, if you have not already heard, our discount is ending. We extended the deadline by 1 day to give people a last-second chance, as well as for this stream specifically, because we have such a big day today in terms of market action. We just know a lot of people are going to be tuning in. So if you have not already picked up a copy of the Edgefinder, here's the link, guys. It is currently 45% off. And this is the biggest discount that we do all year long. It is ending officially today. This is the final countdown to the end of the sale. It's like the final countdown song, right? It is ending very, very soon. If you have not picked up a copy, you get access to everything from the commitment of traders data. You get access to all of our economic data scans. You get access to our top setups algorithm. You get access to our retail sentiment. All of it in one singular platform. If you're serious about your trading, take advantage of the discount. It is the best price that you'll ever be able to get again on the Edgefinder because prices are going up and we will not do such a big discount on the price again this year. So check it out. There it is. All right. Watch out. There's sharks behind you. Don't worry. I got it. I can defend myself. Between that and my captain's hat, right? I'm good to go. This month, you might be asking, what the heck is up with your weird streams? Every month, we change the stream theme just for fun. Behind the scenes, producers have a lot of fun, just kind of planning shows and putting together stuff. And so we're back on the beach today, and it's pirate themed this month. So we're just having fun. You planning any updates for the Edgefinder? Always. Are you kidding me? We are always working on updates. Currently, one of the bigger things that we're working on is improving the individual data scanner so that when you pull up if you want to look at stock indices or gold or industrial commodities or FX pairs, we're making it so that this is more comprehensive and fully functioning. But here's here's what you can always be assured of. If you're somebody who uses the Edge Finder yourself, if you've bought a copy, or if you're considering it, we are in an office in Atlanta, Georgia, every single day. There's 10 people total involved in what we do. We are every single day working to improve the tool and improve the new features that are coming down the pipeline. It's a never stop improving kind of environment. And if you have an Edge Finder copy, you should be, kind of excited about that, just like we are. I use, the Edge Finder every single day for my own trading. And it's exciting to me to know that we are constantly improving, maintaining, working on the tool. And if you already have a copy, you can rest assured we are not going anywhere. We're working hard every single day to make this the best thing on the block for traders. So if you don't have a copy, again, last call, sale is ending, 45% off. It's the biggest discount you'll ever be able to get on the Edge Finder. So there it is. How much is the tool? It's a one-time price. You can find out the details of the discount offered by clicking the link that we're going to drop in the chat right now for you. I bought a copy and I really like it. That's amazing. Appreciate you. And also, one thing to my friends who do have a copy of the Edge Finder, here's a quick shout out to you. If you guys ever have feedback, thoughts, opinions, if you want to share something with us, please comment them. Please share your thoughts. Please share your words of encouragement, criticism, or improvements that you think should be added. Obviously, we can't make every change that people ask, but we read all the comments on this YouTube channel. We read constantly feedback, reviews, emails. We read everything. So if you have thoughts on the Edge Finder and ways that you think it can be improved, please share it with us. We are always open to improvements. So the NASDAQ is down and just shy of session lows here. Take a look at the 30-minute chart. And this thing just selling ahead of the Fed meeting is concerning. We also had data this morning, I believe, and I totally missed this. I was planning for our show today, so I didn't even get a chance to look at this. Manufacturing PMI data came in light. That throws another wrench into the picture in terms of Edge Finder scoring. So I'll show you something for my Edge Finder friends. Manufacturing PMI data should be updated. And what that should tell you is that for gold specifically, the weak manufacturing data is probably calculated as good for gold. Let's check that that's the case. So manufacturing data came in lighter than previous. That's a decrease in manufacturing PMI. The reason it's blue on the data scanner for gold is because weakening economic data is positive for gold. So just a heads up, manufacturing PMI data did just come out this morning and has been factored into the Edge Finder's scoring algorithm. Manufacturing prices were still up. Yeah, inflation's sticky. But at the same time, PMI cooling, that's a little scary. Also, you had job openings come out a little bit light, but prices up. So prices up, but then the purchasing managers index light. That's not a great combination. So, that adds more flame to the fire, more gas to the fire, if you will, for this NASDAQ sell-off. I also want to just really quick, I'm going to leave you guys with James in just a moment. I've got to go do a podcast before we continue the show. James is going to take over and do a little bit of stock session. It's going to be fun. But I want to tell you about some of my own stocks. And maybe James, we can just bring him into the show here so he can chat with me about this. But I got like 1 minute, so I'm just going to share this thought. James, I wanted to mention this. Stocks are selling off. And while we're building a community portfolio, I'm also looking to start building in some of my own shares into my own portfolio. So I just wanted to show you some of the names that I like. I did buy some Starbucks. I'm looking at PayPal, Nike, Palo Alto, Tesla, Airbnb, Netflix, American Express, Salesforce. This is First Solar. They're a solar company. Adobe, Medtronic, Apple, SoFi, Google, Uber, Spotify, and Upwork. And what you'll notice, for those of you who know anything about stocks, these are mostly growth names. What I'm looking for is to build into positions on growth names, because I do think the stock market ends higher than where it is this year. I think it will be higher than where it currently is. And if I'm wrong about that, I'll be holding on to companies that I like. And if I'm right about that, this could be a great opportunity to build some entries into names that I like. Speaking of names that we like, James, we're going into the stock session today. So I'm excited to see what we end up buying, and give us a little preview. I'm going to back out, give you over the show, but give us a little preview and then we'll roll the intro.
Yeah, so today we are focusing on companies that have earnings today. So we did a little bit of that yesterday as well. We bought what did we buy yesterday that had earnings? We bought some Amazon, and we bought, what was the other one? AMD.
Mm.
The advanced micro devices. Yeah. So we bought Amazon and we bought AMD yesterday, and today we're going to take a look at 8 more companies. We're going to do 2 polls, 8 more companies, all that have earnings today. And I also have that special giveaway prepared that I was working on yesterday too, so we can do
Yes.
that as well.
Well, awesome, James. I gotta hop off for this podcast, but in the meantime, guys, we're gonna roll this quick transition, and then you guys are good with James. We're gonna take a look at some stocks and maybe buying some of this dip here today. So stick around. We'll be right back.
Don't go anywhere. Coming up next, we're talking more stocks and adding to the A1 Trading Community Portfolio Live. Remember, if you're looking to start your own stock portfolio for long-term investing, you can get free stock shares just for signing up with our partner broker, Webull. We'll drop the link in the chat now, or you can find it in the description down below. If you're not in the US or the UK, don't worry. You can still buy and sell stock CFDs with Eightcap, which is also linked below. Now, let's add to the portfolio. All right, everybody. So like Nick said, if you were watching the beginning of the stream, then you know we've got a long one today. We have a lot of stuff going on today, leading up to FOMC and after FOMC. So let me give you a quick rundown of everything that's going to be happening. So we're going to do a little bit of stock segment. We're going to add to the portfolio, and then we're going to do a giveaway. We're going to do a huge giveaway. 3 people are going to win prizes today, but we're going to have a lot of you are going to be able to compete and participate in this. What's up, Tim? So we're doing stock segment, and then we're doing giveaway. After that, Nick is going to come back, and then we are doing the trading battle. So Nick, Chris Pulver, and Gary are all going to be in the trading battle together, and that is going to lead us straight into FOMC. We're going to react to the FOMC decision, and then we're going to watch the press conference afterwards. So we have a long stream ahead of us, all day streaming. So if you do leave for anything, don't forget, come on back. We're still going to be live. We have a lot of important stuff to get to still, but here we go. Stock portfolio. Guys, I got to be honest. I know that a lot of the market is pulling back right now, but man, are we taking a hit. We are down $7 in the portfolio right now, which I know doesn't sound like a lot. We started with 500. We had to get rid of Reddit because it was just stinking up the portfolio too much. But 2 days ago, we had our very first ever positive day. We had like $5 profit on Tesla earnings. Maybe that was on Friday, whichever day Tesla had their earnings come out worse than expected, which caused the stock to skyrocket for obvious reasons. That was like the first day that we had a big winner, a big profit, and the portfolio overall was in profit. All of that has been snatched away. All of that has been taken away. You can actually see here is all the open positions that we have. We have a lot of stuff in the portfolio now. And we're also seeing a lot of red. Now, this is open P&L. We can look at today's P&L. So like Meta is having a good day so far. Gold, Toyota, Apple, Visa are having good days today, but overall still down in the portfolio. Tesla is really only our big winner, up, you can see $7 on our Tesla stock that we own. But even today, it's still down a little bit. But let me go ahead and send this first thing on over to Chandler. This is going to be our first poll of the day. And, I need to explain how all this works, just in case you've never seen this before. So this is our community portfolio. And when I say community portfolio, I mean you guys, the people that are watching live right now, can vote on what we buy. We are going to buy some stocks right now, and it is going to be up to you to decide what we buy. In order to do that, you can join our Telegram. You see, we have the link to our Telegram right here. Click that link. It's 100% free to join. Don't have to pay anything, enter anything. Totally free to join. And we're about to put a poll up in the Telegram for you to vote on. And whoever has the most votes, after we put the poll up, we're going to buy that. So, you know what? We had Starbucks in the poll yesterday, and it did not win. Those polls yesterday got deleted for some reason. Yeah, they're not in there anymore, which I don't know why, but somebody deleted them. First poll, however, is up. Do not vote yet. Let's look at the charts before we vote, unless you really, really have a clear favorite. But this is what we're going to look at really quickly. We're going to look at MasterCard. We're going to look at GSK, CVS, and Marriott. All four of these companies have earnings today: MasterCard, GSK, CVS, and Marriott. Again, we're going to look at all the charts right now. So don't vote until we've looked at all four, unless you like breaking rules. But anyway, all right. So here we go. MasterCard, really expensive stock, $446 a share right now, and a little bit of a downtrend, a little bit of a pullback, but most markets are at the moment. This is actually the weekly chart. Let's go to the daily chart. There we go. So yeah. So today we gapped lower, but we are up on the day after that initial gap lower. Analyst ratings based on 40 analysts are saying buy. It is the average price. I really like this analyst price target tool right here that Webull has. I should also mention that we are using Webull. So if you are a US client and you are interested in starting your own portfolio, consider trying out Webull. We have links to that down in the description below. I really love this tool here because it tells you where it's typically trading at and if you're getting a good price on it, relatively speaking. So relatively speaking, it usually trades around $512 a share. And we can see that we are much lower than that right now at about $447 a share. So if we did decide to go with MasterCard, we would be getting in below the average price, which is good, obviously, because we want to buy low and sell high. Here's what the MasterCard chart looks like overall. I'm actually going to switch it to the weekly chart just so we can get a better idea. So we can see that 2020 to 2023, not a ton of movement. If anything, it was kind of in a downtrend. But since 2020, late 2020, early 2023, this thing has absolutely ripped higher. Really huge move this year alone. Year to date, 2024, year to date. Massive move to the upside, pulling back a little bit. But again, most markets are pulling back right now for one reason or another. So there's MasterCard. We can look at the financials too. This is also pretty interesting. So we can look at net income. This is different quarters, and it compares the previous quarter to the current quarter. So like quarter four of 2022, we saw $2.52 billion in net income. Quarter four of 2023, we saw $2.79 billion in net income, and that was plus 10.53% higher than the year before. So we like to see green numbers here. We like to see growth, total revenue, exponential growth. We're seeing operating income, same thing, although quarter four 2023 it was still green, but not like in the 20s, like where we want to see it. But overall seems like a solid buy. However, it does seem really expensive. Remember, we're not buying a full share of anything because we only have however much money. We only have $493 in the account. We only have a cash balance of $69.60. So really, we're almost out of money in the account. And then we're just going to see how it grows from there. But yeah, so we're either going to buy $10 or $20 of whatever we vote on. But MasterCard, that's number one. Number two on the list was GSK. I don't know what this company is, but I've seen it before. Like, I feel like whoa. Their earnings must have come out already, because that gap higher is, one, ridiculous. I mean, that's like the most ridiculous candle I've ever seen. It gapped all the way up here and then gave everything back. Something is not right with this candle here, because on the hourly chart, we don't see that like at all. What in the world? Anyway, let's take a look at the weekly chart, get an overview of the chart overall. Just kind of, wow, this thing has been around for a while. Whoa, we're going back to the 80s. Jeez. So when did we really start hitting our, honestly, this thing is really range bound. It just kind of goes up and down and up and down, but we're not seeing real growth out of it. We're not seeing real growth out of it. I threw this one in here because I recognize the name GSK and they do have earnings today, but this is like, it looks like it's already in its pullback, which means I wouldn't be surprised if it came down lower to like this area here. You can see the tops of these wicks here, the bottom, or the tops of these candles here, the bottoms of these candles here. This thing just looks like it moves up and down. You know, it's not growing and then a pullback and then more growth. It's just kind of up and down over and over. Financials don't look good right off the bat. Yeah. So I kind of doubt that this one's even really getting voted on at the moment, but this one definitely does not have my vote. Next on the list, though, with CVS. I feel like CVS is like the only pharmacy you see anymore. Like they have, like grocery stores have pharmacies and stuff, but as far as like other pharmacies like Walgreens, those are all going out of business. Rite Aid doesn't exist anymore. So CVS has kind of got like the monopoly on pharmacies, it seems like. Weekly chart. How's this thing growing? Growing better than GSK, that's for sure. Looks like all-time highs trading at $103.99, and we are way off of those right now. We are actually below the low average price, right? So if we did get in on CVS, that would be a great price to get in on it. It gapped way lower today. This may be another instance where these earnings may have already come out because it gapped so low, but then has come up from there, currently trading at $56 a share. So we're like half the price of what it was in 2022. So definitely a lot of room for growth to get back up to those highs. Based on 29 analysts, they're mostly saying buy. Financials overall, kind of hit or miss. We see Q3 of 2023 was apparently a fantastic year for CVS, or quarter for CVS, but following one, not so much. But that's CVS currently trading at $56 a share. So if we did buy, for example, $20 worth of CVS, we would get a lot more of a return on investment compared to something like MasterCard, where if we put $20 into this, the price of the stock is just so high that it's gotta move a lot for you to even see. GSK is delisted? Wait a minute. How is that even possible? GSK is delisted. Weird. You know what else is delisted that I found out about yesterday? Check this out. Did you know that you could buy stock in FaZe Clan? Not anymore because it's delisted. But this is literally like FaZe Clan. Like if you play Call of Duty, you know what FaZe is. Shout out Atlanta FaZe in the CDL, but I just thought this was hilarious that you, at one point, it almost looks like they pumped and dumped their own stock. It looks like they went public as a company, bought up all the shares, made a tiny bit of money, and then just dropped everything, and now it's delisted. But yeah, FaZe Clan. All right, what was the fourth and final one that we were going to watch? Marriott. And again, I'll say really quickly, just in case there's any new viewers who are confused and like FaZe Clan just pumped and dumped. Yeah, I wouldn't be surprised. Let me see. I haven't looked at the comments at all. Anybody say anything in here? So just in case there's any new viewers who are confused about what's going on, we're doing a little bit of stock segment, and then we're going to do a giveaway. So if you're watching right now, don't go anywhere because you can participate in this giveaway. First place is going to get an Edgefinder Pro for free. Second and third place are going to get 30 days VIP Discord access. Okay? We did this about a month ago, and it was a lot of fun. And so if you were here a month ago and you remember this big giveaway that we did, then you might know what's coming next because we're doing the same thing. But that is coming. So once we finish up stock segment, we're doing giveaway. So don't go anywhere. And then after the giveaway, Nick is going to come back. We're doing trading battle right into FOMC. We've got a long stream ahead of us. So strap in. If you go anywhere, don't forget we're still streaming. Come on back. We're going to be streaming for the rest of the day. So come hang out with us. All right. Last one for this poll is Marriott. Give me 1 second. Okay, never mind. All right, Marriott. Let's take a look at the weekly chart first, see the overall trend. This is what I like to see. This is clear growth. This isn't bouncing up and down for extended periods of time, slowly moving higher over the year. This is clear and steady growth. Yes, there was a huge dip here, coronavirus, COVID, but after that, it's just been growth. And yes, it is pulling back right now, but so are most markets. I've said that a few times, but yeah. So I like Marriott initially. Investors say hold. However, buying, holding, what's the difference? What's the difference? We are technically below average price according to the analyst price target. So we like that a lot. Financials, net income, quarter after quarter after quarter looks good. Total revenue, same thing. Operating income, pretty much the same thing. So yeah, I like Marriott. Do I like Marriott more than CVS? CVS is down 16% on the day. That just means that we can get it cheap. But we don't see that same growth that we see with Marriott. That's the thing. I like this stock because of the price. $56 a share. If it reverses and starts going the right way and the way that we want it to go, then that's a huge return on investment. But Marriott, you can't deny that is a pretty looking chart, right? But at the end of the day, it's not up to me. I do get one vote, but let's see. First poll of the day, we have 58 votes in here. Remember, guys, if you're watching right now, if you want to get in and vote on what stock we are about to buy right now, you can join our Telegram. Maybe we can drop the link to the Telegram one more time just to get any extra little stragglers in here that want to vote on this. Go ahead, join the Telegram, 100% free to join, and we are going to buy one of these. In fact, you know what I might do is I might move on to the next set, and then we'll buy both of them at the same time. So we'll leave this poll up, and we can get another poll started. So let me send this on over to Chandler. This is going to be our second poll. Oops, Wrong button. Shoot. And there we go. So we are, yep. All right. Now we're back up to, whoa, just had a stroke. So we're up to 60 votes now. I'm going to leave this up. Remember, join the Telegram, 100% free to join. It's in the chat right now. You can join the Telegram for free. You can vote on what stock we're going to buy. I'm going to leave it. I'm going to leave it. We're going to do our next 4. The next poll is about to go up, the second poll, and then we'll buy both of them at the same time, and then we'll do our giveaway. So quickly, next 4 on the list. Again, all of these companies have earnings today. Normally, we try and kind of theme what we're looking at, whether it's retail stores or, tech companies or banks, stuff like that. Group 4 of those together, pick one of them. Today, we're just looking at companies that have earnings today. Next up on our list is one that I think could be interesting. That is DoorDash. Let me tell you why I think this one's interesting. It has not been on the market that long, relatively speaking, and we are way off of all-time highs. So when this thing went public back in 2021, we saw an initial dip. I feel like you always see that. I feel like anytime a company goes public, you see like a couple days where it goes up and then it just tanks, which is kind of what you saw here. We saw a couple weeks of growth and then it went down. And then it went way up and then it went way down. But we're on our way back up now. And we know that has the potential to reach these highs, which I like to see. Analysts, based on 39 analysts, say buy, and we are below average price. 2 things that we like to see. Net income, quarter after quarter after quarter after quarter, we are seeing growth, although really, it's not really growth, is it? It's more less loss is maybe not the best way to say that. But if you're familiar with companies like DoorDash or like Uber, it blows my mind still. These companies are not profitable. You can actually see right here, their net income is in the negative millions. 2023 quarter 4 net income was negative 156 million, which is a 75% improvement from their 642 million lost in quarter 4 of 2022. So, are they profitable? No. Are they heading in the right direction? Yes. Total revenue. So, net income and total revenue, 2 different things, but we do see, again, exponential increase here. Operating income, again, negative numbers, but we're looking at the, year over year to see if it's at least better than last year, because clearly these companies aren't going anywhere anytime soon. We need our Uber Eats and our DoorDash for our lazy people like me. Currently trading at $127 a share. I like DoorDash. I do. Next up on the list, we have MetLife insurance company. We don't have any insurance companies. I'm still not tipping the DoorDash driver. That's not nice. Tip your DoorDash drivers, people. He's not commenting on gold. No, I am not. We are doing the A1 Trading Community Stock segment. Nick will be back after our giveaway. He will touch up on some things and then we'll head into the trading battle. So don't worry. We're going to look at more markets. We're going to do more analysis. We're going to look at Forex. We're going to look at gold. We're going to look at indices, commodities in a little bit. But right now we are doing stocks. Is our second poll up? Yes, it is. So here's our second poll. We just looked at DoorDash. We're looking at MetLife right now, Aflac, and Carvana. So I like looking at MetLife. I like looking at MetLife and Aflac a lot because we don't have any insurance companies in the portfolio right now. These are all of our open positions. Bitcoin, AMD, IBM, Nvidia, Meta, Gold, Toyota, Apple, Disney, Visa, Nike, Amazon, JP Morgan, Netflix, Home Depot, Walmart, Lockheed Martin, McDonald's, Coke, OG, and Google, Tesla. Those are all of our open positions. We do not have any insurance. So here's MetLife currently trading at $71 a share based on 16 analysts. They say buy. And we're trading at the low average price. We're clearly below average, and we're pretty much at low. So that's very nice to see. Ooh, the financials though. The financials don't look very good. Well, let's go to net income first. Nope. Total revenue. Nope. Operating income. Interesting. So overall, the financials for MetLife are not looking too hot. Let's get a look at the chart overall. Weekly chart. Okay, so not crazy steady growth, but not really ranging either. I would still say that this is a market that just continues to slowly and steadily chug along and grow. So that's good to see. And it looks like, based on this, yeah, we're basically just trading off all-time highs. It looks like all-time highs right here, $74.68 a share, which we're just barely off of, which is interesting that the analysts consider that to be a low target price. But maybe they just see a lot of growth in it. Next up on the list, this is number 3 for our second grouping, is our other insurance company, Aflac. Aflac, a little more traditional in the sense of we see steady growth, steady exponential growth, week after week, month after month, year after year. For the most part, upward trend, which is what we like to see. Based on 14 analysts, they say hold. And in fact, somebody even thinks that it's underperforming, which is not good. Currently trading at $84 a share, similar to MetLife, just barely trading off of all-time highs. And it's sitting at pretty much its average price right now. It also looks like earnings may have already come in for Aflac, which is why we see such a massive green candle here. Oh, you know what? Maybe not, because it says next earnings and then EPS estimate. So maybe they have not come in yet. Financials. Net income, most recently, big improvement in 2023 quarter 4. Total revenue, not great. Operating income, little mix, but not great. Yeah, not great. So financially, it's interesting that both insurance companies seem to have shaky financials, but showing growth nonetheless. $84 a share. We don't have any insurance, so it could be nice to get one of those too. Last one before we do our giveaway. Don't forget, right after this, we're going to do our giveaway. Carvana. Car vending machine. Carvana. Where's my... Oh, there it is. I'm catching up on these messages. I'm seeing this little interaction there. Shout out Chandler and shout out Shabazz. David asks, what of Apple? We do own a little bit of Apple. Right now, it's underperforming for us. We own $20 worth of Apple stock. However, our open P&L, so since buying our Apple stock, we are down 2.65%, which is ultimately 53 cents. Today, however, it is actually up. We'll call it 0.6%, 11 cents earned today on Apple stock. All right, last one, and then we're voting. Don't forget, polls are up. Second poll is up. We have 88 votes on the first poll, only 47 votes on the second poll. So after we look at Carvana, we're going to be buying these stocks. So go vote in the Telegram, free to join, linked in the chat. If you just scroll up just a little bit, it's linked in the chat here still. Go join the Telegram, free to join. Go vote on the polls. We're about to buy. All right, so here's Carvana really quickly, weekly chart. Again, this is what you always see from these newer companies, I swear. Actually, this went public in 2017, so I can't even really say that. In 2020, interesting. So this was a market that the coronavirus, absolutely, what in the world? This is really interesting to see. So 2020 happens, Corona, everyone's locked inside, and this thing goes parabolic, crazy, trading from initially, like, we'll call it $50 a share, all the way up to $376 a share. That is ridiculous growth in just a year and a half. This is 2020, 2021, well, a year and a half. And then since then, tanked all the way down to at its lows, $3.55 a share. That is an unbelievable move. And again, that was only like a year and a half. So in 3 years, this thing swung from $50 a share to $376 a share to $3 a share in like 3 years. Right now, we're seeing growth. We are from our $3 a share up to $84 a share right now. Here's the daily chart. And analyst rating, analysts say hold based on 23 analysts. Ooh, we're priced near our high price point. We are way above average. So this would not be the right time to buy. Hold sounds right here. Financials, though, quarter after quarter, net income looks good. Total revenue, not great. Operating income, good. So overall, financials, a little bit mixed, but overall positive. Looking at the daily chart, seeing it grow this quickly, this fast, makes me nervous after seeing what happened here. It's almost like a mini one where it's going to go here and then. So there we go. All right, there's Carvana. Let's vote because we need to get to our giveaway. In the first round, I like CVS and I like Marriott. I think I liked Marriott more. I'm voting Marriott. You guys pick MasterCard, of course. Of course. Like overwhelmingly too. I wish I could sit down and talk with you guys and understand your reasoning behind this overwhelming support for MasterCard. But okay. All right. Clearly we're buying MasterCard. 54 votes in here on poll number 2. I think I like Aflac the most. What we looked at, I think I like Aflac the most, and you guys like DoorDash. MetLife wasn't far behind. Aflac, you guys like Aflac the least. Interesting. All right, well, the votes are in. We're going to buy MasterCard. We're going to buy DoorDash, and then we're doing our giveaway. So don't go anywhere. We're about to do the giveaway. After the giveaway, Nick will be back. Nick will be returning, so don't worry. He's coming back. All right, so MasterCard. Market order, dollar amount. Let's go ahead and grab $20 MasterCard. Buy it. Did it. Done. And DoorDash was the other one. DoorDash was the other one. Double check. Yes, DoorDash. DoorDash. Market order, dollar amount. $20. Buy it. Done. All right, there we go. And we have added to our portfolio. We have added DoorDash right there. And where is it? Master. Oh, it's right there. It's literally right under it. DoorDash and MasterCard. All right. Very good. Thank you, everybody, for voting and helping me out with that. Let's get into our giveaway. All right, so if you remember, we did this about a month ago. You guys seem to really enjoy it. We really enjoy doing it here in the office as well. So we're doing it again to celebrate our long stream. Whenever you guys hang out all day with us, we like to do some fun stuff too. Have some more audience participation. So here we go. All right. We are going to play a Kahoot. I have 10 Kahoot questions for you here. Again, first place gets Edgefinder Pro. Second and third get 30-day VIP Discord access. Now, we have over 300 people watching right now. The Kahoot only allows 40 people to join. So I'm about to throw it up on screen. If you want to play, you got to get in quick. 3, 2, 1. There we go. All right, so that's the game pin. So you go to www.kahoot.it or the Kahoot app on your phone. Enter that game pin. That's how you join, or scan this QR code. All right. There we go. We have our first person in. We can have up to 40 people. Up to 40 people. People are flooding in now. So if you want a free chance to win some giveaway stuff, go ahead and join. There's going to be a little bit of A1 trading trivia and then a little bit of stock ticker trivia. You have to guess the correct stock ticker. So while you guys are flooding in here, just wait a couple seconds. Somebody says that they're boycotting. Giveaway what, how, when, who right here. Giveaway right here. We have 20 people in, so we're halfway there. Only 20 more people can join. They're flooding in, 23 people. We have 16 spots left. If you want a free shot at an Edge Finder or Discord access, go ahead and join. We'll wait about 30 more seconds here. 26, 27. Will we get all 40 people? 28, 30, 10 more spots. If you want to play, 9. They're filling up quick. Oh, somebody backed out. 10 spots left. I'm going to wait about 10 more seconds. Rico Trading, this is a free giveaway to win Edge Finder or VIP access. So if you want to join, do so quickly. We have 11 spots open, 10 spots open. Can we get 2 or 3 more? If we get 2 or 3 more, I'm going to close it. Or I'm going to close it in 5, 4, 3. Rico's already in. 2. We got 32 members, and I think we are done. We're done. All right. Question number 1 is going to be an A1 trading trivia question. Get ready. What A1 trading team member is related to Nick? One of Nick's actual family members works here in the office with us. They are directly related to Nick. Is it Julie? Is it Emily? Is it Drew? Is it Frank? One of these 4 people is Nick's relative. Correct answer was Julie. Most of you got it right. It did have the majority of the right answers, but correct answer was Julie. Julie is Nick's sister, just in case you didn't know. Congratulations to you. You are in first place right now. The quicker you get it, the more points you get, just in case you didn't know. So the faster you get the correct answer, the more points you get. Question number 2. How did Nick meet Frank? I know that these questions are a little, look at that old picture of Nick and Frank. These questions are a little like, what the heck? But were they childhood friends? Did they meet when he hired them? Did they meet in college? Or was it a traders meetup in Atlanta? If you're a big Trader Nick fan, if you watch the live streams a lot, if you watch his videos, then you might know that they were actually childhood friends. They were childhood friends. They've known each other for a long time. They did not meet in college. They've known each other for a long time. Somebody said Tinder. No. Change up in the leaderboard. Nick is joining. Nick, do you want to participate in the trivia? Yeah. All right. Nick's joining. Did you see what the first 2 questions were?
I did not. I missed them. I'll have to watch it back.
Let's see if you can get these right. First question is, what A1 Trading team member is related to Nick?
Oh, I don't know this one.
Nick doesn't know that one. He's forgotten already. Second question was, how did Nick and Frank meet? Was it a college trader meetup when he hired him, or childhood friends? What's the correct answer?
Frank kidnapped me when I was young. No, I'm just
That's
kidding.
the correct answer. I didn't want to put that on there because I thought it might be a little violent, but that is actually the correct answer.
No.
All right.
Childhood
Question
friend.
number 3. How many people work in the A1 Trading office? Is it 7? Is it 8? Is it 9? Is it 10? How many people work in this office? In case you didn't realize, we're actually all in the same building. Nick is not doing this from home. We have an office, and people work here. And there is 8 of us. There is 8 of us.
10's a tricky answer there because we do have 10, but 2 people are not in office.
Right. That's the tricky part. In office, in the A1 Trading office. Any shake up in the leaderboard? Nope. Sequential trade still in the lead. Question number 4. What year did Nick start his Trader Nick YouTube channel? Nick, do you know the answer to this one?
I do.
Was it 2021, 2020, 2019, or 2018? What year did Nick start his Trader Nick YouTube channel? Correct answer is 2018. Hey, most people got that right. 2018. Change up in the leaderboard. Oh, sequential trade got that one correct. Still in first place. Question 5 out of 10. Which team won the A1 Trading which team won the in-office trading competition? There's 2 options. This was Nick's team here, Team A1 Day 1. This was Frank's team here, Team Pip Bulls. You may remember this was a series that we did on the A1 Trading YouTube channel. We traded for the entire month, and at the end of the month, Team Pip Bulls came out on top. That was my team. My team with Frank and Emily and Hallie.
Those are good times. Good times indeed.
All right.
A lot of fun.
Pick up in the leaderboard. Yes. Sequential trade takes second place.
CLMNT.
CLMNT now in first place. All right. A few questions left. Question 6. What broker do we use for the community portfolio? Guys, we just did this. We literally just did this. Was it Oanda, Webull, E-Trade, or Eightcap? Were you paying attention when I gave them a shout out and told you to check out the links down in the description below? Correct answer is, better all get it right, Webull. And most people did. Most people did. All right, I think we are on to stock ticker questions now. Unless there's one more trivia question. Sequential trade has a answer streak of 3. Very nice.
Uh-oh.
Stock ticker. All right, what is the correct stock ticker for McDonald's? Is it M, MC, MCD, or MCDN? Nick, do you know?
Of course. I go there every day. Just kidding.
Correct answer is MCD. Most people got that right. All right, next question. Also stock ticker. Oh, leaderboard first. CLMNT kind of running away with it now. And here we go. What is the correct stock ticker for Visa? Is it V, VA, VSA, or Visa? VISA.
This is like
These are both
stock education today. This is awesome.
These are what?
It's like stock education today.
Yeah, these are both stocks that we have in the portfolio. So if you're paying attention, you might have seen it's just V.
Oh,
Just
people
V.
thought it was Visa.
No, it's just V. We got
Just
it
V.
right there. There's our Visa stock. Just V. Little shakeup in the leaderboard. We have someone new in third place. Can you hold on to it? Get yourself 30-day free access. What stock ticker is ZBRA? Zebra. Is it the American Zoologist Corporation, the America to Africa Safari Tours, Zebra Technologies, or does it just straight up track the price of zebras?
That's awesome.
ZBRA. It's Zebra Technologies. I saw that on
put the
FinViz.
square answer. That's just awesome.
Yeah, I just made up the American Zoologist Corporation. I don't think that's a thing. America to Africa Safari Tours. That's definitely not a thing. And I hope that we're not tracking the price of zebras because that sounds illegal.
It does. Sounds a little
Zebra Technologies is ZBRA. All right, last question. Oh, look at that. A little shakeup again. Very last question, and then we're going to hand out our prizes. Question 10 out of 10. What stock ticker is CAT? Robot litter robot, cathedral repair, Caterpillar, the catalog company. Also, for reference, that's my cat. I threw him in there.
That's a great cat right there, James.
That is a picture of my actual cat. Correct answer, Caterpillar. Most of you got that one right. Yep. Nice. Caterpillars, they make those big tractors and bulldozers and whatnot. Caterpillar. Cat. All right. Let's see who won. Our podium in third place, Sequential Trade, hung around, got third place. CLMNT lost his first place spot to Mario. Congratulations, you three right here are our winners. Mario, you're getting an Edge Finder. Congratulations.
Very nice.
CLMNT and Sequential Trade, you guys are going to get 30 days VIP Discord access. Should we do this the same way that we did last time? Have them email in?
Yeah, that's the easiest way. We'll drop the email here in the chat for our winner, Mario, CLMNT, and Sequential Trade. Thank you guys for playing, and thanks to everybody for hanging out. And a big shout out to James for putting those together. That was those are not easy to come up with. So if we could get some thank you, James, in the chat for that awesome producer skills he's got. And James, we've got a transition here. We're coming in close to our trading battle. So again, big shout out to you. Thanks for doing the stock showcasing as well as putting our Kahoot on. So winners, send us an email. We're going to drop the email here in the chat. Just shoot us an email at support@a1trading.com to claim your prizes. Make sure you send in, your name. We'll check that you're actually the real person.
Yeah, I was going to say, if you did not win, we are going to double and triple verify that the people that actually email are the people that won. So if you did not win and you have no way to verify or prove that you won, you're not getting anything. So don't bother emailing. Winners, thank you guys very much. You guys email in. We're going to verify, double check with everybody, make sure that it's the actual winner. Make sure that you get your prize. So hit that email in the chat one more time, support@a1trading.com. Email us, get your prize. And I'm going to back out, and Nick's going to transition into some trading battle stuff.
Yes, perfect. Thank you, James. And we'll see you back in just a little bit.
Yeah.
All right, guys, we are coming in here. We're very, very close to we got a couple things here on the radar. Today, we're doing a trading battle, which will be starting in just about 10 minutes. We've got Chris and Gary who are going to be going head to head in a trading battle. It's going to be really fun. Before we do that, we're going to just kind of get warmed up to what the markets are doing ahead of that, get some updates on that side for you real quick. Let's run through it. The S&P 500 is, it's bouncing around today. But I got to say, from a perspective of, yesterday's big sell-off, this is a bit of a different change than we've recently seen. A lot of days we've seen big drops and then a big pop that kind of pushes back on this. It seems like with some of the economic data coming in and disappointing the market, right? What the theme of this week has been so far, it seems, is prices are going up, but growth is stagnating. Two real quick earnings reports that I want to call attention to as we try and decipher how strong or weak is this consumer. You got two things that stuck out to me, at least. We had UPS. Check this out. UPS market didn't love their guidance. I mean, they had decent, but look at this. Revenue came in light for UPS. And this is a barometer for the economy. Remember, if UPS is, seeing huge record revenue, that shows a strong economy. People are shipping things. It's a very simplistic way to get an idea of the economy. But it doesn't stop there. You also had Starbucks. Starbucks, I've got a position in. Looks like I bought in too early, but the market dropped big time. I mean, Starbucks is down 17%. This is consumer spending here at its finest. The barometer is people going to buy overpriced coffee, and you've got the NASDAQ, yet the S&P 500, they're down today. But notably, some of the things that are leading the sell-off are some of the things that led the rally. We're talking about semiconductors. We're talking about technology. You've got names that are really selling off and sectors, areas of the market that are looking a little bit weak here today. At the same time, the dollar index chart just looks good. It just looks strong. The dollar index continues to trend higher. And as we get closer to the Fed meeting, really all eyes are turning to what Jerome Powell is going to have to say. The big question is whether or not he is going to get the market ramped up on, rate cuts or not anytime soon, or is he going to go even further? And is he going to point to all of this data and say, well, inflation, prices are stubborn. They're not coming down. The economy, people are employed. So we have the right, we have the reserve, the ability here to keep interest rates high for longer, but perhaps even discuss the possibility of rate hikes. I don't think that that's likely, and I don't think the market thinks so either. But if you do get anything from Jerome Powell that indicates they're not afraid of the idea of potentially introducing a further rate hike, the market would freak out. And specifically, the dollar index would trend higher most likely on that news as people would flock to the dollar as a safe haven, as well as, you look at their counterparts. If we take a quick look at some currency pairs here, we've got the euro trading lower here in the last few days, but really in the last few months, euro has been, less attractive relative to the dollar. You've got the pound trending lower. You got the dollar yen. I mean, you don't even have to mention anything of the dollar yen. This one's clearly a runaway trend for the dollar. The dollar's just super strong. Meanwhile, the Bank of Japan is really struggling to get their currency under control. So there's this theme here. The dollar is just looking really, really strong. And what I want to point out with this too is that it's strong, but it's strong relative to its peers. The purchasing power of the dollar has been getting hurt, just like most major fiat currencies. But specifically relative to its peer, the dollar looks strong because, again, the labor market looks really good. I'll show you some real quick things. I've made this point before, but I'll be quick before we get into, we're going to be starting our trading battle in just a few minutes as we ramp into FOMC, which starts at 2 p.m. We're going to be doing a trading battle at 1. So we're going to have some fun hanging out with Chris and Gary going into that. We'll be just starting that in just a moment. So a couple data points here to think about, guys. We've got jobs data that's been trending up. I mean, you've had really strong jobs data in the last few months. So if you take a look at NFP, if you take a look at the jobs, people are getting jobs. They're hiring. People are getting wage increases overall. And so that side of the inflation story is somewhat problematic. People getting jobs, that's not a bad thing. That's a good thing. But the issue is that when you talk about people getting jobs and then going and spending money and keeping the inflation from coming down, that's where the market is really a little bit nervous. Again, wage growth is still persistent. You have jobs happening. You have people getting hired. And at the same time, you also have, let's go to, what am I looking for? I'm looking for inflation, right? You still have persistent inflation, which arguably, as we set the scene for this Fed meeting that's happening here today, you have inflation that looks like it might be bottoming out. I mean, remember, guys, the target for the Fed is a 2% inflation rate. 2% is what the Fed is after. They've mentioned, there was a distinct meeting in which case people said, to Jerome Powell, are you going to be happy if it gets to 3%? Are you going to be happy if it gets to 2.5%? And Jerome Powell reiterated several times, their target is 2%, not 2.5%, not 3%, but 2%. Well, at what point, and is today the day that Jerome Powell mentions, we're just not seeing, the war on inflation is stalling. Are we potentially bottoming out inflation? And is the Fed going to see this as enough of a threat to potentially, write off the idea of rate cuts this year? That's the big question. The big question now is whether or not rate cuts are getting wiped off the page today. And again, keep an eye on the Fed watch tool, because that's going to be the question. Are we going to end today with the expectations for rate cuts this year nearly completely slashed outside of maybe November or December? Is that where we're headed? And if that is the case, again, expect dollar strength, expect gold and stocks to sell off, etc. Or is he going to downplay the recent situation? That's the question, and that's the stage we're setting as we get into a Fed meeting here in just a little bit. Again, I want to reiterate, look at the dollar index on a daily chart. That is a strong, strong chart. Now, to be fair, though, you got resistance here, and you've got a meeting right ahead of us where the market is going to probably move pretty strongly one way or the other. There's a good chance that you either see this dollar index top out here and perhaps head lower for a little bit if there's any indication that the Fed does still want to cut rates. I have to say, although you can hear it in my voice that I'm more bullish on the dollar and I think they're going to be hawkish, that's my bias. That's my opinion. But it would be crazy for me to not acknowledge that in the last couple times Jerome Powell's spoken, he's done his best to keep the hope for rate cuts alive. The Fed wants to cut rates because they don't want to lose the other side of their mandate. They don't want to see jobs data start to slide. They don't want to see the consumer really start to struggle, because then they just change out their inflation problem for a job problem, which arguably is worse, because if people aren't employed, then businesses do poorly. And that's arguably just as bad or worse than, inflation being a little hot. So there's a case to be made for both sides. And whenever there's a case to be made for both sides, guys, what that leaves us with is a really good battleground. Speaking of battlegrounds, we are about to turn the page and jump into the 6th ever trading battle. Well, not 6th ever. They had a revival. The trading battle. If you've never heard of a trading battle, let's do this real quick. I'm gonna take my screen off so that I can take a look at this. Chandler, if you could put me full screen here. I'm just going to give you a little bit of context to what we're going to do for the next hour. This is going to be really good content. If you're somebody who is, you've been trading for a while, you're looking for some seriously good and experienced mentors to listen up to. These are your guys. We've got Chris Pulver and Gary. Many of you guys might remember Gary. He's come on to the show many times in the past. It's been a minute, and he's back today. So we're going to be doing a trading battle. And first of all, what is a trading battle? A trading battle is it's an event for charity where two traders go head to head and they place in the market live trades during our session here. They're going to be going up head to head, and they're going to be trading everything from FX to stocks to whatever they want to trade. We're going to be jumping into that here in just a moment. And the profits of this event, if there are profits between either the trader, whoever generates the most profit, that amount is going to go to the charity of the winner's selection. The trading battle is one of the coolest things in the trading community, in my personal opinion, and the opinion of many other people. And today we're going to be doing a joint show with the trading battle. I am so thrilled to do this. And again, we've got Gary and Chris on the line. They're going to be joining here in just a moment. As we jump into this session, I just want to drop a link here in the chat. We've got the Trading Battles YouTube channel link. Do me a favor, if you're a fan of the channel, help us out. This is a joint partnership. We're trying to get this type of content more out into the community. We're going to drop a link right here. Click this link. Please go subscribe to the Trading Battle on YouTube and watch this show starting now. They should be streaming over there. So let's get into this. We're going to do a quick intro video, and then I'm going to tell you about some of the charities. We're going to introduce Gary and Chris. It's going to be good. So here comes the intro battle for Trading Battle number 6. All right, guys, and we are starting Trading Battle number 6. I'm so excited for this. What we're going to do is we're going to just go ahead and jump into this. We're going to be introducing our two traders who are going to be going head-to-head and fighting for charity, which is just the coolest thing ever. Our first contender, our first fighter in this battle is going to be Chris. Chris Pulver is somebody who has been on the channel for a while. And if you've never seen Chris before, he is, well, here's his note card. He's the founder and CIO of Streamwise Capital, senior analyst at Market Traders Institution, 20 years of experience in the markets. And he trades everything from stocks to FX to options. And I got to say, from a personal standpoint of knowing Chris, he specializes in volatility. So real quick, let's go ahead and introduce Chris Pulver.
Hey, Nick. How we doing, everybody? Happy Trading Battle. It's going to be a wild one. Let's go.
Chris, we turned the tides because last time you were the host, and now we flipped the script. I'm the host. You're the battler. And I want to get right into this. We got so much stuff to get into. So I'm going to go ahead and introduce our second guest. But before we do that, really quick, Chris, you are fighting today for your charity, Kitty Crusade. Tell us about Kitty Crusade. Why Kitty Crusade? Are you a cat dad?
I'm not a cat dad, but I went and saw, it's a local charity firsthand that I saw what they are doing. Things that I didn't know about. I mean, there's humane shelters and animal societies all over Salt Lake City, and I actually went to an event hosted by Kitty Crusade, and I had no idea that stray cats can have 20 litters over the course of a couple of years, and so controlling that population, and they have a dedicated team for properly trapping, releasing, feeding, caring, vet bills. I mean, they do amazing things. And so I'm not a cat dad, and I'd say I'm like 95% dog person, but seeing what they do firsthand, it's like they need all the help they can get, just like all these other animal shelters. So it's a great cause, and I was happy to be seeing what they do firsthand. So they're a great purpose for me to be trading for today.
Very cool. All right, so we've got our second contender here. We're going to be talking and bringing in Mr. Gary Fitchard, who has been on the show before. It's been a minute, so let's go ahead and we'll bring him in. But while we do that, let me just give you his scorecard as well. So Gary, in terms of past history on just the A1 Trading YouTube channel, he's been on here and hung out with us many times in the past. But here's a little bit about Gary. Gary is the founder and CEO of Traders Network Club. He has 30 plus years of market experience. He's been on our show many, many times. He specializes in everything from Fibonacci, candlesticks, wave patterns, and much more. And I'm very excited to have him back and say hello to my good friend, Gary. Hey, Gary, how are you?
I'm doing well, Chris and Nick. Appreciate you guys. Good to be here, and looking forward to this battle, man.
Yeah, it's gonna be fun. It's gonna be fun. And also, just to touch up on your charity, you've got Kitty Up Ranch. Tell me real quick, what's the choice behind Kitty Up Ranch? Why is that your charity that you're fighting for today?
Absolutely. This is actually very close to our heart because it's not only people that we care about, but of course it's family friends that we've got to know throughout the years, and we just love what they do for the special needs kids, and they have all these animals, specifically horses, and that they use to be able to do therapy with these special needs kids, and it's just wonders how. I love animals, but I tell you something, it's just amazing how animals change the sort of the personality in each of these children. So it's all for the good. So they're doing a great job. They're supporting the community with that as well. So we're pretty happy to support them.
Awesome. Well, guys, we've got a very exciting next hour or so here with Jerome Powell taking the stand about an hour and a half, but the federal funds decision coming out in just 54 minutes to go here. I want to go ahead and jump into the charts because we've got 3 challenges today. And remember, the rules are pretty simple. Whoever makes the most profit, that profit gets donated to charity. It's one of the coolest things on the YouTube, I would say, for traders. And you guys are in for a treat, audience, because, the trading battle brings in together talent from all over the world. And Chris and Gary are going to be some great people to listen and learn from. So let's go ahead and jump into it. You guys both have your charts loaded up. And before we jump into the first challenge, I just want to kind of reiterate again, we've got an environment where the question now is the Fed going to stay higher for longer? And are we going to see rates not go down this year? Or are they even going to talk about rate hikes, or is a rate cut still on kind of the table here for this year? Gary, I want to ask you first. Has this market for you in your trading, and feel free we'll show your charts on the screen here for a second. What have you been watching? How have you been trading the markets here recently with all of the volatility?
You know what, Chris? I always say there's only one way to eat elephant, and not that everyone wants to eat elephant, but there's only one way to go ahead and eat piece by piece out of this market, and that is to chase after small profits. When I first started trading many years ago, and yes, I'm old, but when I started trading, it was good for long term trends. Now in today's market, there's so many news and so many factors that are being considered, and it's so difficult to stick into a good long trend unless you're chasing the JPY and you're in the wrong direction. But it's like there are such great opportunities short term that we can take advantage of. And to be honest with you, for years now, we've been chasing after small profits in the day and raking up some good returns without exposing ourselves to all of this fundamental news that's coming up. I know that Boris has different opinions about whether fundamentals lead or technicals lead. Me personally, I'm a technical trader, and I believe technicals lead and fundamentals fulfill the structure.
Sure.
But then on the other end, you could also say that fundamentals help build up the structure. So it's a two-way sort of solution to it. But at the moment right now, short-term opportunities is absolutely a good way to be able to trade the markets right now and profit.
Yeah, absolutely. And I think that that's a fair take. You've seen this market kind of really change its tone in the last few weeks, whether it be the S&P, the currency world. The volatility is high, higher than it has been at least. And, if you're able to catch those swings, there's some great profits that can be made for sure. Speaking of volatility, Chris, you're the volatility guy. Chris, you do a ton of options trading. Of course, you come on the show regularly. I want to ask your take. Is it similar to Gary, how you're just conceptually approaching, because let's face it, there's been a paradigm shift from 2023, which was just this chugging upward trend on the S&P, the NASDAQ, et cetera, take your pick. The dollar was kind of back and forth last year. It was a much lower volatility year than what we've seen in the last, month. Kick back into gear as volatility is back, along with inflation fears, it seems like. So conceptually, high level, what's your approach to the markets right now?
Well, I think that today's FOMC will set the tone for the bigger dot plot and the bigger message delivered in June by the Fed. The fact that we're having a Fed meeting May 1st as opposed to the third Wednesday of the month. This is going to be before we get additional inflation data for the month of April. And looking at the charts right here, this is my S&P on a 5-minute time frame. This is my opening bell range that I have from a 9:30 to 10:30 block off. You can see the price hasn't gone anywhere. So clearly the market is waiting, and it's going to be floodgates open. It could be, it could be a single direction type day, like we typically see with FOMC. It's a lot of noise and a lot of volatility. So, it's going to be really interesting how Gary and I position for this. I'm sure that he's been thinking about it all week, as have I. So, I mean, we definitely want to have a plan to carve out some profits. I know that our deadline is end of day Friday. But for me, I've got some earnings plays this week. There's over 900 companies reporting earnings. So I have some plays that I've already taken profits on. I have plays that I've running until next Friday, not this Friday. So I don't have to, isolate my window so badly as far as time goes. But realistically, this is what I'm talking about. So the day right here, we have a high around 502. We have a low around 500. That's a $2 range, and we're looking at about an average of $6. Now, that means that in some way, shape, or form today, I'm looking at price to go probably another $4 lower or another $4 higher. Now, I truly don't know what direction. The trade that I have going on right now, that's just an intraday trade on the SPY, is I have a 501 long, I have a 500 long, and this is a long strangle. That's an options play where if price goes up or price goes down intraday, if I get a $4 move here or a $4 move here, I can turn that position into profit. I'm hoping that we have more than just a $4 move, and instead of just a $6 top or bottom, I'd like to see a $7 or $8 move from high to low today. That would give me opportunity to make a little bit more profit. But I paid about $3.40 for the trade. If it goes $4, I can still get 50 cents to 60 cents out of the trade. If all of a sudden we get a $7 or $8 move today, then I take a $3.50 debit, turn it into $4.50, $5.50, and make a few bucks today. So that's at least short term. We got a lot of trading ahead. And but you can just see, like, the market is clearly waiting. One thing I thought's interesting that we could chew on for a little bit here, fellas, is I think that Powell has been very calculated with all of his messaging. We saw a big shift this week in the CME watch tool. So the Fed watch tool, the rate cut probability is now all the way out to November, and the market hasn't quite acknowledged that we might only see one cut this year or zero. And I think that today's message, if Powell's going to come out and just explicitly say it, I think the market can absorb a little bad news now for the stability and the ability to price out, like, okay, when rate cuts do happen, maybe we can get a cleanse that's needed. I mean, Gary's a wave structure guy. And Gary, I'm curious if you see the same thing I do here. I'm looking for a 1, 2, 3 wave move on the indexes. So the SPX, the SPY, the NASDAQ, the Dow, I mean, all these indexes, to me, I'm looking for some type of ABC correction to pull back. But once we get into this area, way more bullish, moving forward. And I just think the market needs to have that cleanse. We need to check this rally that we've seen from October to now. And if we do that, I'm certainly more bullish going into retesting all-time highs than I am watching this market melt up, where we were at the beginning of the year, just wondering, is this market going to pull back? And here we are, 2-3 weeks of selling, and now we're wondering how low is it going to go and how bad it's going to get, when the reality is, I think it's just a technical correction that needs to play out.
Yeah. And if you go ahead and flip over to my chart, I can actually do it. I like the way you got your structure set up there, because on the Dow, I've got the Dow set up the same way. Got a 1, 2, 3, 4, 1, 2, 3, and looking for a 4 correction move. So we're in a rising wedge, and this rising wedge means that there is going to be some downside action in the Dow. Actually, we had this conversation in my live session this morning, our Dow session this morning, and we were actually talking about the dollar as well as the Dow. How it's set up. This is how the Dow set up here, looking for a rising wedge, but looking for a corrective move first, a dip first before the next rally. And then if you go into the actual dollar, because that's the big elephant in the room right now, based on what the Fed's going to be doing today, we look at this right here, and it's a slight bit of a bullish channel that's forming right here, also creating a pattern, and also created a 5-way structure. And what we've got here is the market actually giving us a false break on the top here and coming back into structure. And this means that we're going to see a downside move in the Dow, in the dollar index. And so when we look at this, it's like both of them seem to be pointing in the same direction in some way, both looking for a downside move. And so the question is, have we ever seen the Dow and the Dow and the dollar index move in the same direction? And yeah, we have. We have seen that happen before. So it's really tough to be able to define what the breakout's going to be in today's. But coming back to your question about whether the Fed's going to cut interest rates in this year, 1 or 0, I think I'm going to lean more towards zero. I think there's going to be conversation about, hey, there's this possibility, but I don't think it's going to happen. There's just, as you mentioned, Nick, in your show, that there's a really bottoming out of the inflation numbers. And with the inflation numbers bottoming out, they cannot really go ahead and start cutting interest rates. That's just it's going to boost the inflation back up again. So what they're going to do is they're going to hint at possible cuts, but they're not going to do that. And then what they're going to do is they're going to try and stand aside from raising interest rates because it's going to put more pressure on the banking sector. And we know what happened last year when the interest rates were hiked so high and they were buying bonds at 2%. I mean, there was a completely I don't know how they even got themselves into it. How does banks get themselves into that? Unless, of course, they were pressurized by the central banks, which I think it was the case, and that's why we're in this mess that we're in. So it's a lot of everything that has to be considered, but I don't think we're going to see some interest rate cuts or hikes very, very soon.
Yeah, it's going to be an interesting next couple hours here because, again, we're going to get some guidance from the Fed. As you mentioned, Gary, one thing you can say for sure is that they're going to, Jerome Powell specifically is going to be complacent to both sides, right? Whether you think rate cuts are coming or not, he's going to say something. And usually you can walk away from a Fed meeting and everybody gets something that they wanted to hear. They say, we don't want to see the jobs market, fall apart. And we don't want to see inflation keep running. So it can be a little bit frustrating, but you guys broke down some technicals there. And Gary, I know you're a very technical trader. We've had many, and one thing I will say, the luxury here for me is that I've had a lot of chart time with both of you guys over the years. And so I know your styles. I know, for Chris, you are directional, but you're also very attuned into the volatility of where, things are at and how likely is a big move or how likely is it not a big move. I know that's something we've discussed. And Gary, I know you're very good with your technicals, your directional biases, and scaling in and out of positions. So let's get into some of that positioning, because now as we get closer, I mean, this is the theme of the day, guys. In the audience, we're going to do something really exciting. And also for the sake of charity, we're going to be taking some extra risk here ahead of FOMC. We're going to be placing some trades. Let's go ahead and real quick, we're going to just do our challenge number 1. We're going to transition here, and I'm going to read that to you just after this. All right. So you saw the challenge. The challenge number 1 is to place a trade ahead of FOMC. Now, we're going to be placing a couple trades here today, but this is the broad scope challenge. So what I mean by this is that the first challenge here is that you can place a trade on whatever you'd like to trade. It can be an index. It can be a currency pair that you like. You can trade gold, whatever you are interested in trading here. Each one of you guys gets a chance to go through your trade. And again, you can place it. We're going to be using really quick. I just should mention to the audience, the brokerages or the brokerage that these guys are going to be placing their trades on is Eightcap. Eightcap is the featured broker here today, and you can actually trade directly on TradingView with Eightcap. Big shout out to them. They've got an awesome integration directly with TradingView. So that's where all the trades are going to be placed. And of course, those profits, like we said at the beginning, any profits that do occur will be getting donated to the charity of these guys' selection. So let's go ahead and start with Gary, if you're good. Do you have a chart in mind that you are going to be placing a trade on here today?
I do.
All right.
And based on everything that's going on right now, I'm going to go to the crypto market and take a look and see at Ethereum, because I'm a big buyer on Ethereum. I'm a buy and hold trader. I don't spot trade this in and out. Or at least don't short-term trade this in and out. But I do buy and hold. And so I've been watching Ethereum because I'm looking to add new positions. I've already added in at 3,000. I've said that the market gets down to 2,800, buying in at 2,800, buying into 2,200. So those are the two levels that I'm looking to buy back in again, because we haven't even taken out the top, the high of this run back in 2021. So I think there's a lot more potential to the upside. We've seen Bitcoin actually break through the highs from 2021, but we haven't seen Ethereum, and a lot of the altcoins as well haven't really taken off as strongly as what Bitcoin has. So I think there's potential. Now, like as you said, Nick, I'm a structured trader. I like to look at structure. I like to look at see how the markets are setting up. We've got a falling wedge formula right here, also known as a wolf wave pattern that's actually hasn't broken through that support level yet. So I might be I might be getting in way too soon, but this is the reason why, and I know these trade battles put you in a position where you're not 100% comfortable with the entry levels because you don't want to enter right now. We've been told to enter at market, so I'm going to have to enter at market. But normally what I would do is I'd wait for the market to go ahead and test the bottom of the structure right here. This would be a buy. And then if we get a false break again and the market comes back in again, this is another buy right here. And this is more aggressive, the first buy. The second buy is more the add-on. And then we're looking for price to go ahead and chase after this target up here at the top. So I would be expecting price, based on the structure we have now, look for price to get you about 3,600. Now, that's not going to happen overnight. We've got a few days, a couple of days before this turns. But I'm going to get, because of the news that's happening right here, I'm going to lean, and I know you're more bullish on the dollar. I'm actually the opposite. I think the market is already priced in this rally that we're seeing based on what they anticipate to happen. Things could change with Powell today, and the market could go a little bit differently. But I'm looking at the structure on dollar index. I'm looking at other options, and I'm thinking that we're going to see a rally in Ethereum with the dollar weakness. So I am definitely a buyer. So I'm going to go ahead and throw in a buy on this.
Okay,
Let's do
perfect.
this.
Yeah, I wouldn't have. That wasn't my expectation from you, Gary. But that's what makes these trading battles fun. And also, as you mentioned, guys, the expiration on this trading battle is Friday, so we've only got a couple days here before this ends. And we're kind of having to be put on the spot to place trades. That's how these trading battles go. And remember, they are for fun and also for charity. So also, Gary, I happen to know you typically do tend to average down or average into a position. So is there any chance that, you get filled here today, and maybe if it, drops a little bit, a couple percentage points, would you add to the trade potentially before Friday, or are you thinking just one entry and where it goes, it goes?
Well, if we, I don't know, has the rules changed? Can we add in throughout the week?
I
Yes.
think so. If Chris is good with
Chris
it, if you're
is.
Yeah.
yeah.
I mean, I say we can trade how we need to trade to generate the profits for charity by end of day Friday. So
I like
I'm
it.
good. I'm good with all of it.
I agree with that.
Well, in that case now, because my good friend Chris is a gambler, we're going to do that. Then I'm going to go ahead and throw in a buy here. It looks like they're not going to give me more than that. I'm going to have to drop it down. 6. Let's go. Let me see if I can do 10. All right. So I'm going to do, I think I can do 50. Yeah. I'm going to do 50 right now. I'm going to get in right now. I am going to, however, buy back down again. So that everyone know, I am, however, going to be buying back down. If the market tests this is going to be a third buy right here. Now, this is the daily time frame. So which means I'm not going to have a chance for the market to go through here and come back up again. But if it does come back to test that, I'll buy back in again here. But we won't have time to go ahead and look for that false breakout. So hopefully I got it right, and it's just a support test. And again, it's only 3 days, so I'm not really looking for price to go all the way up here to retest this target here, because 3,600 would probably be the upside target on this right here, but we're not going to get to that point. So what I'm going to do is I'm going to buy in these areas right here, and hopefully I get enough push between now and close Friday to be able to make some profit and win this competition and kick somebody's butt real solid.
Very, very good. Well, yeah. So, all right, Chris. So we've got Gary's first trade in, and he's been transparent about his game plan. He's going to look to add if the market does give him a bigger discount. Cool. He's locked in his first trade. He's long Ethereum. I guess it's up to Chris now. Chris, your turn. Trade any asset ahead of the Fed's interest rate decision here today. We've got about 36 minutes to go. So, what's your pick?
Well, first off, Gary, on Ethereum, you just gave me a great idea. I'm looking at trading some Ethereum futures, and I'm going to get some positions in my portfolio here, so I can collect $550 over the next 30 days if price stays above 2,300, which I'm pretty sure, based on what you're showing there with that falling wedge and what I see in the charts, I think that's a pretty safe play for the next 30 days. And also, if I have price fall into that 2,300 level, there's potential that I can make a 10x profit on that as well. So I'm not going to place this for the trading battle because this is more options, but I'm going to do this in my broker platform. What I'm going to do is I'm going to take a little hedge approach on all this wild and crazy noise we have in the Japanese yen. So I know it's FOMC today. We have the Bank of Japan that has, gone off of negative interest rates to 0, essentially 0 to 0.10. We had this first this first intervention of 2024 that we saw, late 2022 as well, I still don't think this is the official turning of the tide and the unraveling of the carry trade. So what I'm looking at here is I'm going to hedge with some yen crosses. And so it's not just going to be one asset here, guys. It's going to be multiple. And so the screenshot that I have, this is the 2-week volatility of the yen crosses. This is the pound yen, the euro yen, the dollar yen, the Swiss yen. So what I'm going to do is I'm going to play some hedges here with the pound yen and the euro yen going opposite directions. I'm going to go pound yen long, euro yen short. And I'm going to see if I can have one winner outride the other one. And I'm going to go dollar yen. I'm going to take Gary's. So I still think dollar strength is going to prevail because the dollar is just the I keep saying the cleanest dirty shirt, or it's like the dirtiest. I don't know. It's like I don't think other central banks are going to keep the same pause and pushing out the rate. I think other central banks are more likely to cut rates sooner than the dollar and the Fed. So anyway, I'm going to hedge on the pound yen, euro yen, and I'm going to pair the dollar yen, Swiss yen. I'd like to go long Swiss yen, and I'll go short dollar yen. So
Okay.
I just think there's enough liquidity in both of those. You can see that the ATRs are somewhat similar. The pound yen is clearly higher volatility. So I'm going to go long on the pound yen, and I'll go short on the euro yen. So I'm going to find some levels here. Let me find a trade size that feels comfortable. I'm going to try to go after like 200 pips of profit for 100 pip stop loss, or 300 pips of profit for 150 pip stop loss. I'm looking for a 2-to-1 on these trades. So I'm going to get these entered in right now. So let's go pound yen. Let's go long here. So trade. And these are going to be market orders. I'm going to look at so if we're at 196.76, if I did a take profit, let's go pips. Let's go after about 250 pips. Let's go after, we'll try 250. And lot wise, I think with our leverage and 8-cap, we can go one standard lot there. That would be my risk. Is that about right?
To the right.
I got to put a stop loss in. So 250. So I make about 1585 on the trade if I'm correct. If I cut off that pip stop loss around 125, I'm risking 792 to make 1585. That's long on the pound yen. So I'll try to make the trade size match where I'm looking at, I'm going to write this down, about 1600 to 792. So I can make these somewhat comparable. So I'm going to go long one lot on the pound yen, go 250 to 125. Let's go. So that's in. Now I'm going to go euro yen.
And while you place that, Chris, let me just give some context too to the audience. So Chris has a approach where he does a lot of options trading. And when we say he's trading volatility for the new guys and girls in the audience, what that usually means is he's looking for, trying to call out whether or not the market is going to move a lot or the market is going to call out a little. And what Chris is essentially doing here is he's doing it not through options, but through placing inverse or opposite direction trades, both with tight stop losses but expanded potential take profits. And what you're saying there, when you're betting long and short, but you put higher risk to rewards or higher rewards relative to small risks, you're basically betting that something's going to move big on the yen in the next few days. So very interesting stuff there that Chris is putting together for us. He's showing us how even without options, he's still a volatility guy. He's showing, he's looking for moves in the yen. And I think that that's an interesting, approach as we get into what will likely be a very volatile period for that USD JPY specifically, but all, yen crosses. So I like it a lot. So Gary, you're long Ethereum. Chris is looking to set up kind of a hedge on the yen, hedge / looking for basically volatility to expand for him to make money in this situation. He wants something to move hard in one direction. So the one trade takes a small loss and the other one captures a big win. Is that a fair kind of overview of what you're doing, Chris?
That's fair. I'm just going to make sure I get the proper. So I'm doing a 250 pip take profit for a 125 stop. So it's roughly 1600 for profit, 800 for risk, 2-to-1. And directions, again, if we want to specify, I'm going long the Swiss yen, short the dollar yen, long the pound yen, short the euro yen. And those trades are all in. So that's my one asset, just those four right there. And it's a hedge. And so hopefully the idea is one winner, one loser, cut the losers off quickly, let the winners run. And let's see what we end up with in the morning. So in the next 24 hours, hopefully overnight, we see some drama in the yen. If it goes nowhere, obviously I can assess the P&L overall, but I know we're also going to look at trading some stocks, and I'm also going to hedge on that too, Gary.
Yep, we're about to do our second comparison. Real quick before we do that, Chris, can you just show us your trades list in your trade panel there down below on your
Yep.
trading view, just so we can see the overview. So there we go. We got long Swiss yen, short dollar yen, short euro yen, long pound yen. Now, just to draw this up, also the losing scenario, you might say, well, why don't you just always do this? The losing scenario would be if the yen didn't move a whole lot and it just chopped back and forth. All trades could hit stop loss without ever hitting a take profit. But again, Chris is making a volatility based decision to say yen's likely to move big. One of these will hit, one of these will take a small loss. Cool. Very cool. We're up to date on everything. We've got our next challenge here. So real quick, let's roll the transition and jump into challenge number 2. So challenge number 2 is a sensitive topic right now because all stocks seem to be selling off recently. Challenge number 2 is we're going to be trading any U.S. stock, whether you're a Tesla fangirl or whether you love Amazon or what you love NEO. Well, you can't trade NEO. It's got to be a U.S. stock specifically. So let's go ahead and jump into this. We had Gary go first last time. Real quick, Chris, do you have a stock pick for us? And let me also clarify, does it have to be a buy or can you short a stock?
I think we can do either one because my plan
Okay.
was to do both. I wanted to short one, buy one, and try
Okay.
to play a hedge. So I was actually surprised. This is
Right back
interesting.
to the volatility, Chris. Let's do
That's
it.
right. That's right. And NVDA. So we all know NVIDIA. It's been one of the bigger storage stocks this year. So if I go to, I'll just go to this feed here for NVIDIA. Have some analysis on here. So I'm looking at the weekly trading range, and we're looking at about $90 on NVIDIA. One thing that was surprising is if you get into the semiconductor space, SMCI had earnings this week. It's down quite a bit. If I go into my semiconductor watch list here, let me go to semiconductors, drag this over here. These are some of the bigger plays. Day-to-day volatility, IV rank. If I go to, what's supposed to move the most? We have right now, where's my NVIDIA at? Do I have two? Let's go symbol.
Down there.
So I've got an 82.5 on the IV rank, and then SMCI. I guess I need to add that in here. I'm just curious what SMCI is. So I'll add that in there. All right. So that's a 40 rank. Interesting. So there's actually more implied volatility on NVIDIA. But yet, because we had earnings on SMCI this week, I think that's why we jumped up and we kind of changed the calculation on the week. Because so far for the week, we've had a high of 910 and a low of 700. We've already moved $210 on the week. This might have just spoiled my plan here. My initial idea was to consider going long on NVIDIA and short on SMCI to continue with this downtrend. But now that I see that, man, this is a tough one. I feel like I should trade something a little bit less volatile. So NVIDIA 821. Fudge it. I'll stick with the plan.
Does Eightcap have SMCI? Double check that they've got.
Let me check and see if they have the feed here. So
PFD.
I'll go here. Yep, they should have it. SMCI. Let's go Eightcap.
No,
they do not. Nuts.
May not
All
be
right,
an
so we have
option for you.
all right, NVDA. All right, so we've got NVIDIA
You might
here.
have AMD as well.
I was going to say AMD is another one I could do. There's MU as well. It's just a different stock price, but we have Micron in here, so I can play the semiconductor space.
Mm-hmm.
I think I'll do this. I'll go similar styles. Micron, AMD. I'll look at both of those instead of playing NVIDIA. So AMD just had earnings. I will look to see on the weekly chart here. We've had a decent pullback on AMD. Let's see here. All right, here's what I'm going to do. I'm going to take a buy trade on AMD, and I'm going to take a sell trade. NVIDIA just has way more volatility. Micron would be like half the trading range. All right, so I'll go long on AMD, but I will go short on Micron if I can. I don't know if I can go short, but let's find out. So create new order. If I do a market sell, and then I'll check my trade size here. If I did a 0.10, see if I set a price target here. If we get to, let's say, $100, Okay, so I could probably do a lot. I could do one standard lot here. All right, so I'll probably do half a lot on the stocks, maybe one standard lot. But let me go. Let's talk long first. So AMD, we just had earnings here. And the nice thing is Nick, last time you and I did the battle, it was during FOMC. So actually having the breather beforehand, we can prep for an hour and not be like everything is going wild and the charts are all over the place. This is a little bit more calm.
Calm before the storm. Whatever
exactly.
you play trades on will be moving big time shortly after, which is fun.
So we had solid earnings. At least EPS was positive. They had a miss on revenue. Still, I mean, revenue trends. I mean, 5.47 billion. Compared to 6. I mean, that was a downside revenue on AMD, which is kind of interesting. 5.86 and then down to 5.47. I mean, it looks like I just think they over forecasted, to be honest. Like this I don't know. This is kind of wild and crazy. And where are we coming back? We just pulled back on the earnings play to 618 pullback level on this big swing. So I'm going to take a chance, go long AMD. That'll be my play. So I'm going to take a chance right here. There's my create order. Market. If I go, I'm going to go half a lot here and see what that looks like. So if we put a trade on, take profit, I'll just see if we come back into the gap here. So 151 to 155. Let me do a take profit and price. Let me see if we can fill a gap at 158. I don't know. That'd be my wishful thinking, but if I do a half a lot there, so my risk on the trade. I'm not going to put a stop loss in right now. I'm just going to kind of evaluate. If we drop another, $9 or $10, let's go down to 144 or 134 price. So I'm comfortable risking about $500 on this trade, trying to go after more in profit. So I think that's fair. I'll do a half a lot on AMD, and then I'm going to do the opposite on Micron and see if I can, walk away with some net profit. So, all right, I'm going to take this trade. This is long AMD at market, so 144.80 fill. I might as well make this a little bit larger then if I can, somehow walk away with a couple extra dollars to the upside. And then downside, I'm just going to evaluate. I'm not going to put a stop loss in, but I will be checking and watching closely. So that might bite me in the butt. We'll find out. But I'm going to take off the stop loss for now and let this thing ride. If we go up and fill the gap, that's 158. I'm putting 160 in, but I'll take profit on that on my own. So I'm going to buy AMD after a earnings play and evaluate that from the week. And then I will pair that with Micron, which for Eightcap does have a feed here. There's my Micron. And for Micron, I'm going to continue to look for a short. So I'll sell Micron, try to get down to this level at 105. And this will be another 0.5. This one's going to be a market sell, take profit. If we get down to, if we make a fresh low at 104. Oops. If we make I guess I'm in the trade. Let's see if I can edit that one.
No, it's in, buddy. It's in.
I know. Let me go to the trading tab here and try to modify this one. So AMD, Micron. All right, let me modify this. So here we go. So take profit. I'm going to take this down to 100. There we go. That way my take profit's at 100. That'd be a fresh level. That'd be a gap fill. Maybe 97.50. I'll change that again. 97.50. So we'll go 97.
Okay. So long AMD, short Micron. Those are your combo trades here. More pairs trading with stock. Awesome. Very cool. All right, Gary, you're up. We got.
Are you sure? Down. Because we got still 900. Stocks that maybe Chris can look into. Chris, what about another 900?
I mean, I'll happily scan 7,000 if you want me to.
I know you would. All right. Sorry, Nick, you were saying?
I was just saying, Gary, you've got you're up. Which stock and also long or short? I mean, right now the market's super volatile. If you do get something that scares the market, the short side could be very sweet, but same thing for the upside. If you buy into something higher risk and it has a good day, as you think, if you do think that the dollar's coming down, that would suggest perhaps some better times ahead for higher beta names, tech stocks, things like that. Do you have a stock in mind today?
Yes, I am going to look at Tesla. Now I've got a question about the orders, right? Are we allowed to close our positions and then re-enter on the same one, not new but close out, take profit, and then re-enter the game when the market's lower in the next couple of days. Is that something you do?
Yes. Yep. That's fair game. Any trades you want to do ahead of Friday's close, which is when
Okay.
the winner will be announced.
All right, cool. Because I'm up 600. I was up about almost 900 already on my Ethereum trade. So I'm going to hold on to that. I'm probably going to close out on that. But let's go back to the stock trade right here. So the stock trade, I'm going to possibly go ahead and enter. I'm looking at the market filling the gap. What I like about it is the structure again. 1, 2, 3, 4, and 5. Down here, we had a false breakout. Market came back into the structure. We didn't get a retest of that, but it has broken up the new highs. So we're really starting to trend back up again. I think Tesla's going to start seeing some higher highs. There is some downside potential. So I am going to look to add. We've had 2 gaps right here in the move over the last 48 hours. So there's going to be potentially a retest of that level. But I think it's time to go ahead and start getting in right now. So what I'm going to do is I'm going to go ahead and buy with the let's go with let's see if I've got enough margin here. I think I do. Yeah, I'm going to go with a buy with Tesla here. And I am going to buy in at a lower rate as well. Price rejected, margin insufficient. Okay, sorry. I did over leverage on the previous trade. So what I'm going to do is I'm going to have to go with 1 for now, and I'll add on to this one a little later. There it is. Oh, still not. Okay, so that's what I thought. Let's go back here. Let's see if I can cash out a little bit on this. Don't want to cash out too much on this, but I'm going to go ahead and let's go ahead and take some profit on this.
So taking some profit on Ethereum, make room for Tesla.
Yep.
All right.
Make some room on Tesla. Now, let me see if I do a quantity change here. Should be able to protect position. Let's see here. No, that's not the one that's... Oh, modify. Let's see here. I believe it is... let me see if I close partial order. That's what it is. That's what I was looking for.
There you go. Yep.
All right. So I'm going to close out... actually, I'm going to close out 15. So I'm going to go with 20, 15. So, yeah, I'm going to go with 15. Actually, go with 25. My bad. I need more margin. So I'm going to close out with 25 on that.
Mm-hmm.
And let's see if it did close out. Yep.
Now you're down at 25.
Perfect.
Got it.
All right. So now what I'm going to do is I'm going to go with the Tesla. Let's go back with Tesla here. And let's do a buy on Tesla. And I'm going to do, let's see if I can get in if it's going to give me 4. I want to go in with 4. Nope, still too much. Let's go with the half that equity. Yep.
There you go. You're in.
All right, good. So that'll give me an opportunity. I think if Tesla does come back down south, I'm going to make some more profit on Ethereum. I'll go ahead and cash on Ethereum, and I'll get back on Tesla once again when it drops back down a little bit, a little lower. But I think we should get a little push. Now, this is going to really be my sort of trade for the news coming out because I think we're going to get some volatility at 2 o'clock. And then depending on that, will either be a re-entry or be taking profit up here at the top.
All right. Very cool. So we got little bit of semiconductors, we got Tesla, crypto, we got currencies, we've got a little bit of everything here in the audience. I do want to just mention here before we get into challenge number 3, just a quick shout out to the sponsor, the head honcho of this event. It is the Trading Battle. If you've never been a part of one of these things or seen one of these things before, Gary and Chris are currently going head to head. Their P&Ls are being shown on the screen, and this profit, wherever it goes, or whoever wins the most profit, will be going to charity. We're streaming right now to my own YouTube channel, but also to the Trading Battle. I want to ask you guys a favor. If you're enjoying the show, let's help the Trading Battle get some more exposure on the internet. What they're doing is one of the coolest things for the trading community that I've seen in my years on YouTube. They're sponsoring traders to go head to head. It's for charity, tons of free education. They're bringing traders from all around the world. Let me just ask you guys to do us a quick favor. All of us here, Gary, I know, and Chris, you guys are big fans of the Trading Battle, what they're doing as well. Help us out. Make sure, go subscribe to the Trading Battle. Let's help get their YouTube channel some more exposure big time. So with that said, real quick, we're going to do another transition, and we're right into challenge number 3 on the Trading Battle. Stick around. Here it comes. So this is a fun one. The sabotage trade is a trading battle classic where essentially Gary and Chris will get the chance now to pick for each other an asset that they've got to place a trade on. So a quick example would be if I were to give Gary Apple and he has to take a long or a short position, he can choose whether he wants to go long or short, but I get to choose the asset. Now, in this case, these two are going to be choosing each other's. So we're going back to the same order now where it's Gary's turn to go first. So with that said, Chris, you select which asset Gary's placing a trade on. It can be anything that you can trade on 8cap.
All right, Gary, I'm gonna throw Coinbase at you. You got to trade Coinbase on 8cap. So Coinbase has earnings tomorrow after market close. So this will be in the window of when our trades close. So you gotta pick an earnings play, pick a direction. I mean, in truth, I mean, it's a crypto related pair. I mean, the correlation between Bitcoin and Coinbase. So if you got a general direction on your crypto, then I'm sure Coinbase is going to follow along. But earnings, it's at least going to cause some movement, and that's what I'm going to get you to trade.
Yeah, well, thank you, Chris. This is actually really easy. You've made it really easy for me because we're at current support right now. Now, I would love it if you got your timing right a little bit there and got me down here below, but that's okay. I'll go ahead and buy up. It's a really simple decision for me right here. I'm going to be buying it, and we probably said go up to this area right here. I'm going to have to probably liquidate some more of my Ethereum here to get into that position. Yes, it is. I'm going to have to cash out on this one right here as well. So let's do this. Let's go ahead and free up some more margin. It's a pity because I'm going to make a crap load of money from this position, but I have to. I got aggressive on this position. So I'm going to go ahead and close out some more on this. Let's do 15 on that and then close out partial. So just taking some profits along the way. Again, it's short-term trading, right? This is what we're doing, right? The short-term trading. So now they'll give me some more opportunity here to buy in on this one. And I'm going to go ahead and actually double up on this because I really think this is going to be a good one. Let's see how much I can get in. So I'm always going to push the limitations here. Let's see if I can go into 20. I don't think I'm going to be able to buy in again on this one, but I think we should be good on, nope, rejection. I love it. I love it when I get rejected. It feels like my wife.
We're full margin trading here today, guys. We are maxing out margin in the name of charity.
Yes, we are. We are absolutely insufficient. All right, so I'm going to go with 5. I think 5 would be the right number here, and it is not. So let's go with 2, and I think we're going to be good with 2. Still not. Am I able to trade this one? It is on the. There should be 1. Still nothing. All right. So
what's your used margin show, Gary? If you're in your trading panel.
Let's see how much margin I do have left.
Okay, you're running fairly tight with that used margin. You're at 8,600 right now.
Yeah, I'm gonna have to loosen up a little bit more here on the Ethereum to get into that position. But let me do that. Let's do 5. Let's drop that down. This is what the margin is that I'm getting. My equities up here to 11, so I'm cashing in nicely on that. All right, let's try that. Let's go ahead and see if I can get this one in. Let's pull it down here and let's go back to, oh, sorry, I flipped it over. It's going to be Coinbase, and it's going to be this one right here. And we said we're going to be buying on this one. Let's fucking get in with let's go with 2. Just another let go a little bit. No, so it's still going to be 1. Nope, looks like I might have to cut it down to 0.5. There we go.
All right.
I'm in.
There we go. He's in. All right. So just a heads up too. Let's just take a pause here before we jump into Chris's turn to do the sabotage trade. Gary is very positioned here for volatility to the upside, specifically in terms of equities, right? Tesla, Coin, both of these higher risk names, and Ethereum, right? All of these things generally benefit based on what you started today's show out with, Gary, which is your thesis of I think the dollar's baked in. I think we're going to see some relaxation on the rate cut side. And that, of course, would jump all the prices of all three of your positions. So you're very, very much positioned for it. I'm very curious to see if that does play out. Now I guess we got to flip the script. So Chris, you're going to be trading something that Gary puts upon you. So Gary, what's your sabotage trade for Chris?
You know what? I'm going to give Chris the Canadian Swiss. And I know it's something that he's liking, but I think it's at very critical levels.
Yeah.
And I think it's, especially over the next couple of days. And
Yep.
with the news coming out today, I think Chris is going to have a hard time with this pair. But I know he's very talented in picking the right directions. Let's see if he can do it this time around.
All right. So CAD Swiss. So this is one of my favorites. I've been in this trade for a while. I'm currently sitting in positions that are as low as 64.80 and lower. My overall position has been rock solid. I got filled on this recent pullback, and I'm long on the CAD Swiss in my personal portfolio towards 68.50, and I'm staying long in this thing, medium to long term, all the way to 71.72. So I think what I'm seeing right now that I don't love is I'm seeing this potential indecision. I could see the CAD Swiss actually falling with some risk off trading. So Gary, will you give me a compromise and let me can stay consistent with this pairs trade stuff? So if I went short CAD Swiss, would you let me pair that with a long Aussie Swiss for charity?
Aussie, let me see Aussie Swiss. Let me just see the structure. Aussie Swiss.
They're both really similar, dude. They're both really similar.
Yeah, it's similar, but there is actually. That's that. You know what? Be honest with you. If I do that, that's really giving you a huge card, a get out of jail free card.
I know, but that's the point.
That's huge, buddy.
I mean, I could just keep my mouth shut and just trade it on the sidelines and be like, look, Gary sabotaged, but I still made money.
You know what? So, I'm gonna be the good guy, and I'm gonna say go for it.
I figure when we're in a live session like this, you got to be nice, and you got to play to charity, right?
It's for charity, right?
Very
so
good.
I'm gonna be the nice guy. But
all right.
But after the session, you're down, man. You go.
Yeah. Okay.
All right. So you're going to be going short CAD Swiss, long Aussie Swiss.
Yep. I'm going to go short CAD Swiss here.
Another interesting thing, just a note on the CAD pairs, oil, I believe, is falling apart here today.
Yep.
Took out support levels at, I believe, 81 for WTI. I mean, oil's on the downside. Maybe one thing to quote on that is we had some light PMI numbers today. Again, baked into the next hour is all the conversation about how the Fed sees the latest round of economic data, whether or not this inflation problem is going to come in. And that's why we're positioning this trading battle right where it is. These guys are placing trades for charity. Again, the profits will go to charity ahead of FOMC. We've been getting their take on it, as well as watching them place trades. So what better kind of content than live trading? So we're coming in just a few minutes out from finishing up the trading battle and now positioning into the big event. So again, Gary, you're exposed mostly for some softness from the Fed, some dovishness. Chris, you're just exposed for the Fed's got to do something exciting, and if they don't, nothing's going to move. So it'll be interesting. That's kind of a summary here of you guys' positioning. You can look how many orders Chris has got here on his screen. He's got a little bit of everything on there. And Gary, you're selective and specialized, I would say.
and massive trade sizes for Gary. I didn't know you went 20. Did you go 25 lots on Ethereum?
I went 50 first, my friend. This is come on. We can try to make money here.
Yeah, I know.
I like the way Chris has actually broken it down, and that's pretty much from a conservative, not really knowing exactly, and we don't really know. News is always going to surprise us in some way, right? But this is a good exercise to show traders that sometimes you have to hedge sort of your positions, and a lot of our trading that I do as well. We look at multiple currency pairs and specifically like New Zealand CAD, Aussie CAD. And sometimes we be long Aussie CAD, but short New Zealand CAD. And it's also to play the hedge, especially if you're picking up a lot of movement in the Aussie, New Zealand CAD and the Aussie CAD. We would then go ahead and try and position ourselves in the opposite direction on the New Zealand CAD, just to be able to pick up some profits on the other way around. So it's really important to know that trading this market doesn't necessarily have to be black and white. It's got a little bit of different strategies around a strategy, and it's good to have.
Yep. No, exactly right. And again, just spending time with you, Gary, over the years, I know you oftentimes will trade both with a bigger term trend as well as counter trend in the meantime. Gary, while Chris sorts out his orders and gets all set up, I have a question for you from the audience. Gold thoughts. We're getting so many people who are, of course, curious as always. I mean, all three of us spend probably half of our time just answering the question, what's up with gold? But I'm just curious, Gary, your thoughts on gold right now. I mean, again, if you do get softness from the Fed, that could help out the story for gold going higher. But is it overdone? And is this starting, to look like it has more room to pull back? What's the bigger term picture here for you?
Yeah. Now, gold and dollars has also been. We've seen the sort of similar rallies, but then gold's
Yes.
continued while the dollar corrected itself a little bit. I've spoken about this a lot of times. In fact, your session too, we've spoken about gold, and I love the way gold is set up structurally, because structurally it should correct itself. Now, the problem is that we have an internal structure, and this internal structure is going to create a little bit of support right here where it's trading. In fact, if I go ahead and pull up my FIPS on this, you'll probably see right about here is, it's just slightly higher. So we got a good level of support right here with the markets now trading back below. Now, this is a good sign for possible further downside moves. So what I'll be looking for is, does price stay above 2,332? If it does, we could go to the next sort of target, and that I'm going to look for internal structure on that. And that would mean that gold would go all the way up here to around about, we're looking at 2,500. Now, I know there's a big following that's been trading gold. And I've said, I'm more of a buy and a hold gold, physical gold, than I am spot trading it. But the gold price right now has potential to go up to 2,500. I'm waiting for gold to come down lower. I'm not a buyer in gold at this level. I'm looking for gold to come down to around about 2001, 2002, around that area. And then I would be a super big buyer in gold, because I see upside potential to 2,500.
Well, Gary, I have to give a testament to yourself from one of the times that we spoke previously. We spoke before this recent huge run in gold, and I remember you specifically saying that a return back to somewhere in that high 1800s to 1900s could be a point to load up. And sure enough, it came right down. And I remember when you said that, I was like, I don't know, gold looks like it wants to tap against 2000. And we were on the same page where we thought gold would go higher, but you made the point that you wouldn't be surprised if it gave you one more chance. So perhaps we see that one more chance again for gold. It does typically have these big cycles, and then they, much bigger than I even, ever expect them to. The big swings high and then the big pullbacks. But real quick, guys, I want to also just follow up on where we are at here as we are coming to the end of our battle here, where we've set up everything. Gary, you've got the screen really quick. Can you just give us a trade panel update here, just so we can see all of your current positions as we kind of finish up here? So you've got your 3 trades. You've got Coinbase, you've got Tesla, and you've got Ethereum all long. He's the risk on guy today, guys. He's looking for the Fed to be accommodative. We'll see if that can play out here today. And again, very, very margined here, but it's for a good reason. We're trading for charity. So awesome, Gary. Chris, you're up in terms of current positionings. I know you've got a little bit more here. You've got 9 positions open. You're long the Aussie Swiss. You're short the CAD Swiss. Again, you're long Bitcoin. That's a new one. Did you just go long Bitcoin?
That in there.
Oh, you snuck in a Bitcoin long when we weren't looking.
What?
Yep.
No, that's awesome. Short MU, long AUD. Is that
AMD.
no?
Yep. Advanced Micro Devices. Yep.
Oh, okay.
AMD.
So
That was the pairs trade with the semiconductors, and then
right.
Swiss yen, dollar yen are paired, euro yen, pound yen paired. Now my trades are very much in line with what's going to happen in a minute. So over the next hour, my panel here is going to be making all sorts of noise and ups and downs, and I'll be watching red and green all over the place. So I know that in the next 24 hours, there's going to be a lot of trades for me to manage, hopefully setting a, 2-to-1 stop, 2-to-1 reward to risk, or 1.5-to-1, things like that. I guess in those limits filled, which knows my profits will be larger. So I am playing volatility with a lot of these pairs trades. And so I know I'm putting myself in potential harm's way for the whipsaws, but I'm trying to keep it out of the way enough that we're not getting stopped out in the short term, but rather letting prices run for the next couple of days.
Yep. And guys, we are just as we are speaking, we're coming about 10 seconds here now. Chandler, not to jump scare you, but can you give us a breaking news as we come in very close to the event? We'll run a breaking news. Maybe. Can we? We can always trust Chandler to deliver. He's got all the media stuff. So we've got 2 o'clock just hit. Let's see how markets are reacting, of course, to the Fed funds decision. I assume it just came out as expected, and no surprises there. But remember, 2 o'clock is the number that comes out, the interest rate. But the bigger news and where things will move. So we got 5.5%, by the way, guys. So 5.5 came out as expected in terms of the Fed funds rate. The bigger movement will happen at 2:30, which is in about 30 minutes here. When that happens, you're going to hear from Jerome Powell. It's all about the forward-looking commentary from him. So again, just to reiterate, Gary is positioned mostly risk on. He's thinking, rate cuts could still be somewhere coming this year. I think in the market is now, kind of starting to even think no rate cuts are coming. So if you get 1 or 2 or whatever a possibility, Gary's positions will fly. Coinbase, Tesla, Ethereum. At the same time, Chris is betting on volatility. He's looking for big movements here this afternoon, in which case, his hedge positions could be made to be very interesting. That's going to do it for the show here in terms of the trading battle. But before we end and before we outro, again, let me just give you some rule outlines here for the trading battle going forward. Friday is the last day. So at the end of Friday, these guys' positions, whoever has the most P&L or, God forbid, the least losses, will be crowned the winner of the trading battle here. This is trading battle number 6. I just want to say this is a for charity event that is set up and created by the trading battle. They've asked me to host, and these guys have been kind enough to come on with their time and do some trading for charity. I just want to say, as we close this up, do us all a quick favor. We've got a link that we're going to drop here directly to the Trading Battles YouTube channel, where we are streaming this to live as well. If you're watching on my channel, you're watching on the A1 Trading YouTube channel, you're watching anywhere else, do us a quick favor. Go subscribe to the Trading Battle. Support what they're doing here. This is trading for charity. Come on, help us out. 1 sub each would just help us out tremendously in making sure that these continue and continue to bring trading talent from all over the world like Gary and Chris. Before we close out, Gary, you've got a YouTube channel. What's the best way for people to find out more from you if they want to learn more about what you do or find out more about your style?
Yeah. So yes, we do have a YouTube channel, tradersnetworkclub.com. Traders Network Club. But also we've got a website, tradersnetworkclub.com. And basically the best way to get a hold of us is there. You can see the website down below, tradersnetworkclub.com. Go to that website. We have online support if you need to. You can send an email to our support at tradersnetworkclub.com as well. And we have a variety of different products. Just as you've seen today, we do some short-term trading, which is fantastic. We've got different strategies we use to be able to implement it. And we run a good trading service that helps traders be able to get started in this market. We know how difficult it is. Chris, Nick, you guys know. I know for sure, when I started, how tough it is to become profitable and to be able to put your foot in the right direction initially. The biggest thing that traders fear is fear of loss, right? And so we have to get over that. And how we teach them how to do that is how to properly manage their risk in trading so that they don't get upset or don't get to sort of like shell shocked when we have news announcements like this, because we should be able to trade through news announcements like that without fearing the market. And the only way to do that is to properly manage your risk. So go check out tradersnetworkclub.com.
Awesome. So tradersnetworkclub.com, best way to find Gary, and best way to connect with you, Chris. What's the how can people find more information about what you do and about your trading style?
Yeah, I'm live quite a bit on YouTube, as well as joining the A1 trading team, Nick, a couple times a week. So best spot is just to catch me live on YouTube. And then once you're on with me, just ask to join my Discord channel. My Discord is Chris Pulver Trading, and that's the best place to find me directly. I also have links to some workshops that I do for small groups and individuals, also affiliate links to all the education, some robot strategies, trading rooms, things I run privately. That's all on my Discord. So free group to join. And if you want the extra attention, the extra time, the extra, live trading and services and things like that, it's all available in one-stop shop with my Discord. That's Chris Pulver Trading. You can follow me on YouTube as well. You can catch me with Nick and the team at A1 Trading.
Absolutely. Chris Pulver on YouTube. Find him there. And again, a big shout out to Gary and Chris for joining me here today for Trading Battle number 6. Guys, we'll keep you updated with your P&Ls. Best of luck to you. And again, feel free before the end of the Trading Battle to close your positions or to add to them, whatever you want to do. Maybe sneak another Bitcoin buy in there, Chris.
That's right.
Chris.
I'm loading up 50 lots, Gary.
Get a text later on today. Hey guys, I just went ahead and
By the way, I do have to say that Michelle in the background did add another $5,000 to Gary's account just because he over margined today. So I want to make sure everyone knows that.
little handicap. That's okay.
I just
All
say,
good, all
you know what? When you run out of money, what do we say? Add more money. Right?
Add more money. Yep. Deep
That's
pockets.
right.
Deep pockets.
That's right. So at the end of the Friday, whoever has the most profit, that profit will be generated and sent to charity, which is fantastic. And guys, thank you both for joining on the show here today. We'll let you go, and we'll speak back with you soon.
Fantastic.
Sounds good.
You.
Thanks, Nick.
All right. See you guys.
Thank you, guys.
Bye-bye.
All right, guys, that's going to wrap it up for Trading Battle. Trading Battle number 6. Again, please do us a quick favor as we close out the Trading Battle portion of the show. We jump into now the press conference and prep for that. Show keeps rolling. We're not going anywhere. The show is continuing on as we go right into the big event here today. And we'll all have to keep in mind Chris and Gary's positions. And again, watch out for any sneaky Bitcoin buys from Chris. You never know when he's going to drop a lot on Bitcoin. Anyways, that was a lot of fun, guys. And I just want to ask you a quick favor again. As I mentioned earlier, make sure to go subscribe to the Trading Battle, show some love, show some support. I'm a huge fan of what they do over there. And now it's time to get back in. Where's my hat? Hold on. To pirate theme, because here comes Jerome Powell. He's coming in. Okay, so I'm going to share my screen. We're going to pivot back into prepping for this. So just give me 1 second. We're going to... All right, guys, and we are back. Back to square one, I guess. It's like the whole stream just reset. That was super fun. I love doing those trading battles. That was my first time hosting a trading battle. What'd you guys think? Did I do okay? I gotta. Oh, hold on 1 second. I gotta share my screen again with sound enabled. Okay, and we are good. Okay, sound should be working. James, can you hit us? Very nice. Very nice. We're back. Okay, so again, we are coming in here just about 20 minutes to go. And we are going to see what Jerome Powell has to say. I want to take a look across the market, see how things are reacting so far. Of course, let me just reiterate, as we mentioned earlier, the Fed funds rate did come out 5.5%. That is as expected. But it's not about this number. A lot of people who are newer to trading might say, what the heck? Why isn't the market spiking one way or the other? Hold your horses, slow down, or I'm going to make you walk the plank. Okay? It's pirate theme in the month of May here on A1 Trading. So we're having fun with pirate hats, pirate ships, and all sorts of stuff. So the real piracy of this is that 5.5% was exactly as expected, right? The market doesn't move when things are not surprising. The market moves when things are surprising. The surprise could come during the press conference at 2:30. That's where some of our friends from Wall Street will start asking questions to Jerome Powell. You know, hey, is this inflation problem going to be something that means no rate cuts this year?
Pretty much in line with our expectations.
Right? Is it really in expectations? Because Jerome Powell's expectations earlier this year were rate cuts, and now that seems to be not so much the case.
We're making progress.
Right? So as we get closer to the press conference, I want to just take a look at charts, see what's going on. If we take a look at the dollar index first, the dollar index is slightly lower here. But remember, the movement is not on the rate, the Fed funds rate. 99.9% of the time, the market knows what this number is going to be before it actually comes out, because all traditional economics say, what the Fed's going to probably do. What's bigger is this. So in terms of market reactions here, take a look at the dollar index. The dollar index is tagging resistance. And as we tag resistance here, again, you've got resistance, resistance, resistance around that 106.4 level. You've also got, however, though, a bigger picture upward trend on the dollar index that you've gotta pay close attention to. Big move up, consolidation, big move up, pausing at resistance. If you get something hawkish from the Fed, which is my opinion, this is where Gary and I differed on the show. Gary was pointing that he thinks dollar index has played its move and likely is going to retrace further. Fed's going to be, continuing to stick to their rate cut plan. If that is the case, the dollar index, in my opinion, would need to see a break through that 105.5. I don't think you can really get bearish on the dollar index based on traditional technical analysis unless you see a failure at where we found key support. Look at these two green candles. Those are solid. Dare I say it? Is that a perfect candle? Can we do a perfect candle?
Perfect candle.
Perfect candle.
Right,
Oh, that's one of my favorite ones. Okay. Perfect candle, but not quite a perfect candle. Now, let me show you what a perfect candle would really look like today. A perfect candle would look like this. Can we get another perfect candle?
Perfect candle. That green candle right there.
That would be a perfect candle for the dollar bulls. So in terms of what would need to happen, Fed would need to say, look, problematic, inflation, pump the brakes. It's not going anywhere, and the problem persists. Dre, thank you very much for the $2 donation to the stream. Is it lagging? Guys, we got stream lag today? I'm sorry for that. Yep. Fortnite. I played Fortnite last night with my wife. My wife, she loves Fortnite like way more than me. I actually don't really like Fortnite that much, but my wife loves it. She can't get enough Fortnite. It's the weirdest thing. She's not even a gamer. That's the thing. Oh, wait, hold on. Where am I? There I am. She's not even really a gamer, but she started playing Fortnite with her brothers and sisters. She's got 4 brothers and sisters, so she's one of 5. And they started playing Fortnite together. I jump in and I'm just like, this takes me back to my college days. Anyways, dollar index, again, getting back to my theory here about a potential perfect candle. I mean, there's a lot. I got to use the green marker because the green on this chart is crazy. The dollar index is so strong. Again, what we're looking for would be either, if you're a bull, I think you probably want to see a break through these highs. If you're a bear, if you're somebody who is bearish on the dollar, this is my opinion. I think you want to see reaction from this top point does not make me a bear. Selling off through this low, 105.5, that makes me concerned for the bull case on the dollar. Okay. So I think path of least resistance for the dollar index is to the upside. I'm not betting, my whole account on a dollar breakout to the high side, but I'm saying I lean bullish on the dollar.
I'm going to put my whole life savings into this.
We're not going to do that, right? But I only play Rocket League. That's fun. But we're looking, generally speaking, for more upside on the dollar. That would be my bias. Now, what's giving me that bias? Is it just a hunch? No. Trading is all about probabilities, stacking odds in your favor. Okay. Any good pirate knows you can't just show up without a plan. You got to have a crew and a ship and all the sails in order, and you got to swap the poop decks, right? If you're going to be a good pirate, you got to come prepared. Same thing for trading. You got to be prepared. You got to have all the systems in place. You got to have all your risk management in place. You got to be disciplined. You can't be a wreck when you're trading. Any good trader, again, where's the bloody rum? Can't be trading when you got rum on the beach like Jack Sparrow, right? So,
excuse my drawing. I've been drinking.
20 rupees. Thank you very much for the donation, Raul. I appreciate it. Any amount, 24 cents. Yeah, but the dollar is expensive, so we appreciate any donation. Thank you so much. You don't have to donate whatsoever. Shout out, Raul. Yeah. Yep. No walking the plank for Raul. I don't know about the rest of you guys. Anyways, yeah. We're getting close here again to the press conference, about 15 minutes. We'll pull up the stream for you. Don't worry. We will have that coverage as soon as we have it. You guys will be able to see it. So here's the thing. In terms of current setups for me, I am still bearish the Russell as long as it stays there. Yep. Bearish the Russell. I have a short position on the Russell. I have a bullish position on the dollar via my Euro USD short. So let me show you my current positions that I've derived from the Edge Finder. I have a short on IWM. Oh, why am I not logged in? What happened to my login here?
Anybody else ever felt like the chart is talking to them like this?
It's because I have it open somewhere else. Hold on, guys. I got to find my trading view. Where have you gone? Well, that's my notes for the trading battle. Here's my trading view. This one was a liar. Let's get rid of that liar. Walk the plank. All right. So here's the real trading view. You can't have two trading views logged in, I guess. Okay. Okay, we're good. So let me show you current positions. I got IWM short. This one I've got to stop trailed. Let me go full screen here. So I'm short the Russell. Stops are just above this high. If we push higher on the press conference in any capacity, I will take profits on this Russell short. I'm floating $1,300 on this. Nice little hedge. I'm not going to lie. I do have other long positions on the stock market and some of my my position trading, but this was a nice little hedge. It captured a little bit of the downside move. We tagged a resistance point, tagged a downward trend line. Russell, remember, is small cap stocks. Small cap stocks, I think, are going to take it on the chin if you get rates staying higher for longer. Look at all these donations. Adam, thank you very much. Appreciate you. Let's get some claps for Adam. Wow. Thank you, Adam. Appreciate the donations today, guys. You really don't have to. I hope you enjoyed. I hope you really enjoyed the trading battle. I had so much fun doing that. Again, it was my first time hosting. I hope I did okay. I was a little bit nervous. And, I usually, my confidence goes away when I don't have the hat and sword. So I had to pull the hat and sword off to be all professional for the trading battle. So what's with the hat? What do you mean what's with the hat? This is my look every day. I just got my feather done. I got my feather done. So anyways, it's pirate theme in the month of May. I'm floating a profit on the Russell. On Euro USD, I'm short Euro dollar. Euro dollar, I'm at break even. I've been in this trade for several days. It's gone nowhere. The Euro has gone sideways on me. I entered it over here. So I went short right here, popped against me, but I'm still in the trade. I didn't get stopped out. 50% did end up holding. The 50% retracement level did hold. We've rolled over. I'd like to see follow through here today to the downside. Again, US dollar bullish. That's my base case for today. So we'll see. Raul again for the 20 rupees, my friend. Thank you so much. NAS 100. Yeah, let's look at a couple different charts here. A couple things I want to knock out. I want to look at gold. I'd like to look at the NASDAQ. Euro. Again, I'm short, stop loss above the highs here. Let's take a look at the NASDAQ really quick, see where that's at. The NASDAQ's been all over the place today. And again, I think appropriately so. It's not moving a whole lot, even though you did get some economic data that came in. Not great. PMI data came out this morning, guys, and it was no bueno. So not good because we had a couple things. We had JOLTS job openings came in a little bit light. But on top of that, you also had PMI numbers, manufacturing PMI numbers, which came out 50.3 last time. We saw expansion in the manufacturing sector. We saw contraction this time. In fact, let's pull this up on the Edge Finder because we've got an Edge Finder. Why don't we use an Edge Finder? It's the best thing on the market that ever happened. Oh my gosh, guys. You're not even ready for what just joined the stream. You're not even ready. I don't think I'm ready. We're going to run a quick break. And then just after that, we are going to be joined by Frank Scallywag Kabibi. It's going to be a great time. And let's roll the break. We'll be right back, coming very soon into the data, or the press conference. So we'll be right back with Frank just after this.
Attention, A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partner broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. He's here. He made
Yard.
it.
Hello, everyone.
It's Pirate Month here at A1 Trading. We got swords, we got hats, and I just want to say, Frank, you look great in that scallywag hat.
Thank you. Thank you so much.
So
it took a lot of convincing to put this on, but after a stern thinking about it, I eventually, tied it up.
Well, what I'm going to do is I'm going to tell my kids someday that this was Orlando Bloom as Will Turner. So
I don't even think I did it right, to be honest.
It looks great. Can we get a little applause sound effect for Frank's outfit? And I mean, we got swords today. We got a stream theme change. Wow, what a day. Again, press conference is 10 minutes out or less now. We're going to see some reactions from all over the place. I just want to ask real quick as we get closer. There's 962 people hanging out with us here live. If you're enjoying the show, smash the thumbs up button, or you're walking the plank, and I can't help you with that. So again, smash the thumbs up button, support the stream. Appreciate you guys. Frank, manufacturing PMI came in light today. After last time it excited the market, this time it kind of disappointed the market. Saw a little bit of a slide here. Now market's kind of stepping back. Is that just because we've got the FOMC meeting coming in, or the press conference in just a few minutes?
Well, maybe. I mean, it was mixed. ISM was lower. It was cooler than most analysts thought it would be. And then final manufacturing was higher, but overall there wasn't much of a change. And yeah, I guess it could be muted by whatever Powell's about to say. But, the fact that there's been pretty much a lack of volatility overall this week, it's kind of making you wonder, is this news necessarily going to move the market the way we want it to?
Yeah.
Honestly, I hope so, but I'm wondering, just from seeing how this week has gone, things are as expected. I guess we didn't get a hike. No one expected a hike or a cut.
Yeah.
It was the same way that they've been talking about for all these months, but.
It's been interesting, Frank, because, the stock market has seen some volatility, but the VIX has not really reflected it that much. Kind of a weird reaction. I do want to say that, you and I talked about this earlier on in the week and last week, this key level of resistance that did come into play. The NASDAQ sold off around 17,800, kind of happened across the stock indices as a whole. You saw the S&P 500 saw a bit of a sell pressure that came in there. And at the same time, we saw the Russell come down and the Dow come down. I mean, everything seems to be selling. But, do you think that Jerome Powell is going to come in hawkish today? And is that, bearings for us to potentially go back and retest the lows? I mean, if Jerome Powell comes out and basically says, hey, we just probably don't see rate cuts for a little while. If you were to say that, you think the S&P goes back to the lows?
Yeah, I do think if it's hawkish. However, I don't think he's going to be less or more hawkish than he already is. If you know what I mean. It's just his stance is going to be like, I'm going to say most likely the economy is strong and rates are are where they need to be right now. Inflation is not where it needs to be, but
Inflation.
they're fine with holding it where it needs to be for interest rates. And yeah, I don't think they're going to change much of the narrative as what they've been talking about for the past couple months now. So
Yeah. Well, what's more interesting, maybe, Frank, is that the market is now kind of adopting what they're saying. There was a period of time where they were like, we're going to stay where we're at. We're not, feeling the pressure to cut. And the market just said, oh, whatever. We don't need rate cuts. Kept going. Now with yields, the 2-year yield, you pointed out to me recently, we just crossed over 5% on the 2-year yield. I mean, it's getting the market's attention, I think, now, especially with price problems staying persistent. But some of the economic reads coming in light with that manufacturing PMI data. So, advanced GDP came out much lighter than expected. So potentially back on the table is that concept of stagflation before. Also, I just want to call attention. Thank you again to Future FX Trader. Thank you for sharing so much knowledge and also being as transparent as possible. Many thanks from London. Mohammed, thank you very much, Mohammed. Very much appreciate you and your support to what we're trying to do here. Again, Frank, I think it would be interesting, not just for the indices, but also for gold. If you get stagflation, I guess, what's your thought on gold? Are you looking for long trades? Are you sidelined? What are you thinking?
Well, I was actually going to ask you a question, and
Yeah.
I guess it pertains to gold. It's about the 2-year yield, but
Yeah.
I think the fact that the yields are coming down off this interest rate decision is the reason why gold is up, because gold was not really making any moves to the upside until like the past hour or so.
Yeah.
So I was wondering if this move, if this decision to stay where they're at in rates is actually bearish for yields, or if it's a good sign for gold, or is it just this is the immediate reaction? Because right now I'm looking at gold, and I had an open trade on GDX for about a week, and I closed out yesterday. But gold is now sort of rebounding from those lows again. That sort of support level around 2,300. It dipped back below yesterday, but it's paired almost half of its loss from yesterday. So I don't really fully know where gold is going to go. I mean, geopolitical tensions are still a major thing, but you haven't heard much about any news on that front in the meantime. I think what it's going to be about is what Powell says. And right now, it seems like Powell is going to say, the same thing he's been saying. Stocks may continue to do fine in this high interest rate environment. And, we're fine with keeping rates where they are. Like, feel like a broken record, but maybe keeping rates the same is bullish for things like gold and stocks and stuff.
Yeah, and that's the thing is, I think the market will probably be looking for confirmation. This is probably the most battleground spot. Confirmation that the plan is still to cut rates eventually. And no mention of, I think the most hawkish thing he could say, practical potential thing he could say, I think it's unlikely, but possible, is rate hikes are still a possibility if the inflation data does not start to cooperate with this pause that we're doing, right? So that, I think, is maybe what gets your dollar to break out through that 106.5 area. If you're going to see a breakout substantially higher, you've got to see the Fed. I think I'm with you. It's got to ramp up its hawkishness, not just repeat what it said over and over, which is, we don't want to see inflation get out of control, but we also don't want jobs to slip. So
I'm hoping he says something new because I want that volatility.
Right.
It would be nice to see the market pull back further, the stock market at least. But I saw in his statement, and the Fed's statement actually, that what they added was there's been lack of further progress, which we expected him to say, but this was in contrast to previous statements where he said, we're seeing the progress we need, progress. But he also added that treasuries, they're sort of declining their positions on treasuries. So the cap was 60 billion. Now they've reduced that to 25 billion. So they're, I guess, in a way, less bullish on bonds. So as in the less bonds they buy, I guess it's the higher the yield may go.
Sure.
You can interpret that way, or you just figure that they're maybe just going on a less strict stance against interest rates, and hoping that inflation will come down as a result.
Yep, exactly. Ivan asked what's going on, guys, and if this was Chandler's idea. We are doing for the month of May. It's Pirate Month. You missed the intro sequence, but we are sitting on the beach right now. We just parked the boat, and it is Pirate Month. That is our theme for the month, and why not? We just have fun with these streams, anyways. So, yeah, it's like SpongeBob SquarePants. Yeah, we could put some SpongeBob stuff in here, just because, again. It's Pirate Month. Anyways, again, we're awaiting the feed here. Chandler's got it pulled up. We're waiting for Jerome Powell to take the stand. As soon as he is on the stand, guys, we will have the stream here for you. Don't go anywhere. We'll pull it up as soon as we have it. I do also want to say, while we wait, today is the final day of the Edge Finder sale. We're doing 45% off. It's our biggest sale of the year, and today is the final day. We extended it one day just for this event. So if you have not picked up a copy, 45% off. Here's how you can get access. We're going to drop a link here in the chat as we're speaking in YouTube, or if you're watching this back at a later time, you can click the first link in the description of the live stream. Click that to send a message directly to someone on our staff. They can hook you up with a copy of the Edge Finder if you're a
Inflation
regular
has eased
show fan.
substantially over the
Pick it up
past year,
there.
while the labor market
All right,
has
we're going.
remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs to workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular. but it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also look at we look at surveys of workers and surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that that the data will have to answer.
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for
Expectations are not anchored.
or anchored, stable, roughly? Would you disrupt that for the last half point on PCE?
You know, I don't want to get into complicated hypotheticals, but I would say that, you know, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, you know, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well. And if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. You know, our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? You know, I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data, answer to that question. That would include inflation expectations, and all the other data too.
Would that be like a reacceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that. So it would be the totality of all the things we'd be looking at. It could be expectations. It could be a combination of things. But if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take, which would cause us to want to consider rate cuts. And those would be, two of those paths would be that we do gain greater confidence, as we've said, if that inflation is moving sustainably down to 2%. And another path could be, you know, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, you know, I think really it's the same question. I think the data will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent. I mean, is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably, that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing. And also, even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation. And that's really what we're trying to do, is to cool the economy and work with what's happening on the supply side to bring the economy back to 2% inflation. And part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way. What we've said is that we need to be more confident, and we've said, my colleagues and I today said, that we didn't see progress in the first quarter, And I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope. And I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months data, but this is a full quarter. And I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking.
Mr. Chairman, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter? And what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah. So we will, we will put the thing under a microscope. I will say nothing is going to come out of that that's going to change the view. I think that, in fact, we didn't gain confidence and that it's going to take longer to get that confidence. But confidence, I just think, you know the story. What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected. And those two are working together to sort of be higher than we had thought. And there are stories behind how that happened. I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
No, I wouldn't say that. No, I mean the active tool of monetary policy is, of course, interest rates, and this is a plan we've long had in place to slow, really not in order to provide accommodation to the economy, but to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up with financial market turmoil the way it did the last time we did this, and the only other time we've ever done this.
Craig Forrest from Bloomberg. 2 questions. First, simple one. Given the run of data since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth that's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree. It's, nobody likes it, but is there an argument for being patient and working with the economic cycle to get it down over time? Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it'd be appropriate to cut until we were more confident that inflation was moving sustainably on 2%. We didn't get our confidence in that didn't increase in the first quarter. And in fact, what really happened was we came to the view that it will take longer to get that confidence. And I think I think it's the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting, and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them's further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it, and that's how we think about that.
Claire. Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It'd be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print has led to some to start mentioning the term stagflation with respect to the US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that. In terms of your second question was stagflation. I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%, and that won't be. So I don't see the stag or the inflation, actually.
Michael McKee from Bloomberg Radio and Television. The vice chair of the FOMC said recently that he's willing to consider the idea that potential growth has moved up. And of course, he's Mr. Potential Growth, our star. Do you share that view? And would that imply that maybe policy isn't tight enough?
So I think I would take that question this way. We saw a year of very high productivity growth in 2023. And we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. The question is, will productivity run? There are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy that's not about productivity. It was about having more labor, frankly, both through, in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for potential output this year and next year and last year for that matter too. So I think in that case, I think you really do have a significant increase in potential output, but you've also got, so you've got more supply, but those people also come in, they work, they have jobs, they spend. So you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point, you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive. And, our evidence for that I went over earlier. You see it in the labor market, you see it in inflation sensitive spending, where demand has clearly come down a lot over the past few years. And that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. So GDP growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in today's meeting? And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
Was there a discussion about a rate hike at all?
So the policy focus has really been on what to do about holding the current level of restriction. That's part of the policy. That's where the policy discussion was in the meeting.
Yeah, I wanted to follow on the 3%. Is there a time frame of persistent inflation that would trigger a rate hike?
There isn't any rule. You can't look to a rule. These are going to be judgment calls. Clearly, restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will take and how patient we should be, it's going to depend on the totality of the data, how the outlook evolves.
Victoria.
Hi, Victoria Guido with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between starting to cut in, say, September versus December?
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things. And if we were to take on a whole nother set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And, we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing. And we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference between, whether you start in, say, September versus December? an economic
There's a
distance?
significant difference between an institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is. And you know, we just don't do that. I mean, you can go back and read the transcripts for this is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So.
Thank you, Chair Powell. Question about the labor market. You've mentioned a few times that the labor market is normalizing. Certainly today's JOLTS data suggested that things are kind of getting back to pre-pandemic levels. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wages peaked, wage increases peaked a couple, 3 years ago, essentially all wage measures have come down substantially to that. But they are not down to where they were before the pandemic. They're still roughly a percentage point higher. And we've seen pretty consistent progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down, and essentially it was flat year over year, I think roughly. So yeah, I mean, that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures. Employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
Scott. Your word. Nancy. Sorry.
Hey, Chair Powell, Nancy Marshall-Genzer from Marketplace. You mentioned consumers, and consumers are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards. People looking to borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed and we will bring inflation back down to 2%, and then people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. I think headline core PCE peaked at 5.8. Now it's headline peaked at 7.1. Now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes. I mean, I think that restrictive monetary policy is doing what it's supposed to do. But it's also, in this case, unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation, and the reason why we're having this conversation, is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived. So I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government data? And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have when someone a new person goes to rent an apartment, that's called market rent, and you can see market rents are barely going up at all. The inflation in those has been very low. But it takes, before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years, actually, to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident in the timing of it. But yes, I expected that this will happen.
Thanks.
Nick Jasinski.
Thank you, Chair Powell, for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same trajectory, easing during the pandemic, fighting inflation with restrictive policy on the way out. Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
So that you're right. I think that may happen. And you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries that are now considering rate cuts is that they're just not having the kind of growth we're having. They have, their inflation is performing about like ours or maybe a little better, but they're not experiencing the kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we'll be careful and cautious as we approach the decision to cut rates, whereas I think other jurisdictions may go before that. In terms of the implications, I think obviously markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think we haven't seen, in addition for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago. And that's, I think, partly because emerging market countries, many of them have much better monetary policy frameworks, much more credibility on inflation. And so they're navigating this pretty well this time.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You sort of backed away from the notion that the economy would need to encounter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along a relatively painless path for the economy, or is some softening in the labor market and the economy likely needed to bring inflation back down?
So you're right. I think we thought, and most people thought there would have to be probably a significant dislocations somewhere in the economy, perhaps the labor market, to get inflation all the way down from the very high levels it was at the beginning of this episode. That didn't happen. That's a tremendous result. We're very, of course, gratified and pleased that hasn't happened. And if you look at the dynamics that enabled that, it really was that so much of the gain was from the unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply side problems, and also some demand issues as well. The unwinding of those really helped inflation come down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2% sustainably. We will bring inflation down to 2% sustainably. We hope we can do it without significant dislocations in the labor market or elsewhere.
And speaking of dislocations in the labor market, in terms of cutting, you said if there were weakness in the job market, that could be a reason to cut rates. So if the unemployment rate were to tick above 4%, but inflation not back down to your 2% target, how would you look at that? Would the unemployment rate popping back above 4% catch your attention?
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly what I mean by that, but it'd have to be meaningful and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would probably not do that, but it would be a broader thing that would suggest that it would be appropriate to consider cutting. And I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You've said that broad and material changes are needed for the Basel III endgame proposal, and you've mentioned that a reproposal is something that's on the table. As you've had more time to sort of sit with the public commentary, process that, and understand the options available to you, do you have a better sense of whether a reproposal will be necessary? And do you have a timeline in mind for when some sort of movement will be made on that front, either a reproposal or a move to finalize?
So let me start by saying that the Fed is committed to, completing this process and carrying out Basel III endgame in a way that's faithful to Basel and also comparable to what the other large comparable jurisdictions are doing. We haven't made any decisions on policy or on process at all. Nothing. No decisions have been made. I'll say again, though, if we conclude that reproposal is appropriate, we won't hesitate to insist on that.
And then do you need to resolve issues with the capital proposal in order to advance other parts of the regulatory agenda, or do you expect to continue to make progress on those other agenda items?
There's no mechanical rule in place there, but I would say that the Basel III process is by far the most important thing, and really is, I think, occupying us at this time in terms of what we're moving ahead with.
Let's go to Mark for the last question.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus, which you recently identified as a priority, while allowing for a range of views or even dissent? We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System. We have 12 reserve banks around.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus, which you recently identified as a priority, while allowing for a range of views or even dissent? We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve.
I think the sound went way out.
Country where they have their own economic staff, not the people who work.
It's a little quiet now.
So each reserve bank has its own culture around monetary policy and its own approach and that kind of thing. It guarantees you a diversity of perspectives. So I think that the perspectives are very diverse, but and it's from the obvious, gender and demographic ways, but also we have more people who are not PhD economists. So we have people from business and law and academia and things like that. So I think you actually do have quite a good diverse perspective. I think all of us read these stories about a lack of diversity, and we look around the room and say, I don't understand. I really don't understand what they're talking about. So, but I get the question though. Thank you very much.
The chairman of the Federal Reserve. That news conference ended almost as soon as it started. The Fed chair thinks we're restrictive. Here are the scores.
I think that's it, huh? We made it to the end.
That's it. What did you think?
I shorted the Russell again during that. I poked this out inside of the Discord. I'm short the Russell again. I didn't really see anything or hear anything that was incredibly dovish. Also didn't really see anything or hear anything that was incredibly hawkish. Again, kind of mixed in terms of what we saw there. What'd you think, Frank?
It sounded like they were really trying to press him, and this time more so than other times, where they wanted to know what his mindset was on, well, you thought 3 this year, now what do you think? And he was like, well, it depends on the data, like stuff like that. He wouldn't answer a question, which is strategic, but it kind of goes to show that his stance, where he was like, we have projected 3 rate cuts, and now they're saying they have to wait. I mean, we're getting towards the middle of the year in a couple months. So in the next few months, if it's still the same narrative, are we still going to see 3 rate cuts? Or are we going to see 1? He's going to have to give an answer at some point.
He seemed to have shot down the idea of 3 rate cuts. He said that at that time it looked like 3 rate cuts. And then he mentioned he doesn't think that that's still like practical. So I think, the market's okay. The market's like, okay, so not 3. Everybody's on the same page with that. But then he definitely avoided the question of, is there a possibility of, when the guy asked him, was there a discussion of rate hikes? He didn't answer no to that. I noticed he didn't say outright, no, we didn't talk about rate hikes. Like, that's not in our conversation. He just said that, we think it's sufficiently restrictive for now. So I don't know. It was, there was some dovishness in it too. I think, if you're somebody looking for a reason for the market to rip, you could have pointed out that, he didn't come out swinging with rate hikes, and that he pointed to progress. And, I don't know. It was very mixed, Frank, because there was also, when he talked about jobs, right? When he talked about jobs, somebody asked, would a 4% handle freak you out about the other side of the mandate? And he kind of said no. He kind of was like, no, 0.1% or a couple tenths of a percent, it's not going to change everything for us either. So I don't know. I feel like there was just a very, I would argue that there was a lot in there for people who think he sounded hawkish to actually say, yeah, he kind of looked hawkish. I think there was a good mix.
Yeah, I agree. I think hawkish too. I mean, mixed, like you say, but it felt more hawkish leaning now that, the sort of narrative he's been going with has changed a little bit. Although what he's saying live in front of an audience is not, it's very cryptic. So it's hard to tell what he's really trying to say.
I feel like this summary was like, we think we're restrictive, most likely, but we're going to watch it close, which is sort of leaning on like, more hawkish, I would say. But then again, market's up. So why did it pop? Maybe the argument is just people kind of thought it was going to be even more hawkish than it was. Maybe that's why market is up right now. 1.10% on the S&P, Nasdaq's up 1.27, Dow is up 1.27. I mean, maybe the market thought it was going to be more hawkish. Maybe he was expected to say there's a chance we hike rates again. I don't know.
Yeah, I guess we'll find out tomorrow when there's more news.
Yep, we've got more data coming the rest of this year or two, but the rest of this week. Guys, it's been a long day. We've been streaming for nearly 4 hours. So, Frank, thanks for joining me on the stream. I think we're going to call it good there. It's been a long day. So, with that said, Frank, thanks for coming on, and we'll see you next time.
Sounds good. Thank you.
All right, see you, Frank. Guys, last call. This is officially it. We are shutting down the sale here just shortly in about an hour. This is the last call. If you're a regular stream viewer, just a heads up, if you still want a copy of the Edge Finder, it is currently 45% off. And this is the official last call. Signing off, 45% off. If you don't have a copy of the Edge Finder, again, this is fair warning. When this sale ends, this is the biggest discount we do all year long. We're celebrating 2 years since we launched this product. And if you've missed the sale up to this point, let me just give you fair warning. At the end of the day, the price is going back to normal. And if you haven't gotten it, again, you'll miss out on several hundreds of dollars discount. Again, this is a big celebration to celebrate 2 years since we launched the product. Do not miss the discount. There's the link. We just dropped it in the chat. Boom, bam, there it is. Take advantage. And with that said, guys, we will see you back on the next one. Have a great rest of your day. Thanks for joining us on today's show.
Inflation.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.